All right, here we go. Ladies and gentlemen, this is a live broadcast. If you're looking for the Tesla Q4 full year, you need to just fast forward until that timer right above me is all set, done, and over with, and you'll hear the earnings call come in, okay? We have a lot to go over. I decided to start early, left work so that we could get it, baby. So I hope you guys are ready and willing. We'll turn off this lo-fi music. We're gonna get it, baby. So I hope you guys are ready, and I hope you are going to be entertained. All right, we're back. Now, I got a lot of setting up to do still, but that's a-okay. I hope as you guys trail on in here, we can sit back, relax, chill. We can have a good time. I decided to grab a beer today. And I am hoping to catch a small buzz with you guys. I think it should be a good time. But let me get this pushed out. We want to make sure everybody can be a part of this live stream. And for those of you that are in already, do me a huge favor. Hit that like, hit that subscribe button, and let me know if my microphone sounds a-okay. We got a lot going on here. And FOMC meeting right now is going on. I think what I'll do is I will get that up and running so that way we can listen to the FOMC meeting while it's going on. Here we go. That's going to start in 8 minutes. Let's see. Let me just bring it up here. Let's see. Let me switch this real quick. Make sure I can get you guys up in this biscuit. There we go. All right, Yosef's already in the building. That's what I'm talking about, baby. Yosef's already in the building. You know it's a party now, baby. Let me get everything up and ready. We're gonna get everything posted so everybody is aware of what's going on. Of course, we have Tesla, the question, the Q4 full year 2024 financial results, and the question in a webcast coming out in a little longer than 3 hours. But we're going to get the FOMC meeting up and running right meow. So bear with me here while I get everything set up. I hope you guys are ready and willing. Should be a good time. You never know. I'll just bring it up. I'll pop it in there for you guys. Let's see. There we go. There it is. Just listen here. All right, they haven't started just yet. They're going to start at 2:30, so we got just a few minutes. But we are going to be sure that we have everything so you guys can listen to it with me. We're going to keep an eye on the S&P 500 as well when this happens. If you guys have seen before, which I'm sure you guys have, when the FOMC meeting starts to come out and we get a lot of volatility in the market, of course, Jerome Powell, sometimes he likes to drop the mic and really put some hurting on the overall market. So we'll see if that happens when he comes out. Of course, if we look at the CME Fed tool, you guys are going to find out right away, we are looking for a rate stay. What I do is I just go to the CME Fed tool right here, and I'll scroll down, and you can see right here today, January 29th, 2025, we have a 99.5% outlook on a Fed rate stay. So we'll see if that actually happens, because I promise you this, if he doesn't take the market by surprise, if he does not stay and he actually decreases those rates, I doubt we're going to go up any higher. But I will say this, if we do end up going higher, the market will probably crash on that news, okay? So just keep that in mind. We definitely don't want to see the market actually heading towards a rate raise, which I don't think any of that will actually be in the bidding, if you will. So bear with me here. We're gonna make sure everything gets posted. Everybody gets it. Get it, baby. Let's see here. Bring this up. Send it to your mama. We're gonna push this out, guys. Got a early start, which is great. This wasn't scheduled till 3. Yep. Probably should have made this an FOMC image as well. That's okay. We'll be sure to let everybody know we are here for the Tesla, but of course we are going to be sure we listen to the FOMC minutes. That's very important because that is going to set the tone for the rest of it. What's up? No E, thank you so much for posting all that in the Robinhood stock market watch list for me. And we'll make sure that everybody else gets it as well. What's up, Muley? It's good to see you. Joseph in the building as well. Hang out with me, guys. We're going to be here for quite some time. I'm pretty excited about today. Very excited about today because not only is the FOMC minutes coming out, but we also have Tesla's Q4 full year. The full year 2024 financial results and the question and answer webcast, the earnings call happening in about 3 hours here. So very, very important. And of course, we were just going over here the CME Fed. Now this should be 99.5% that we are at a rate stay. And a lot of people might not understand why these interest rates are so damn important. They are extremely important for a couple of reasons. One, if we are at a 99.5% rate stay and he increases rates, which is probably not on the table, but if he increases those rates, you're going to see the market freaking crash, guys. It's going to crash. If you see him cut those rates when we're at a 99.5% at a stay and he actually cuts rates, you're going to see the market skyrocket, absolutely skyrocket. Now, regardless, what's up, Jimmy? Jimmy's in the building. You know what? Cheers to Jimmy. Cheers to you, sir. If we have a rate stay, we are still going to get volatility in the market. We will still get volatility. Volatility is imminent. We are going to get volatility, and you can see right here, this is the S&P 500 for the day. We had this huge gap down. You guys remember this. This was when DeepSeek came out, okay? When DeepSeek came out, it absolutely shook the market. If you don't know, then you're living under a damn rock. It shook the damn market up, and there's good reason for it. If they can do it cheaper and if they can do it better, that's still to be determined. Of course, it's China. It's not surprising that China would come out with false news and act like they're beating their competitors. They've tried to do it before, but regardless, what's up, Ash? It's good to see you, brother. Good to see you, man. But regardless, they're shaking up the tech industry. I've pointed it out multiple times on different time frames. NVIDIA, ARM, Broadcom. I took a hit too. I was in the leader Broadcom when we took that big hit. I was in this. And then I used this as my new stop. You know, the anchored VWAP, it bounced off of it. And, I was happy to see that it bounced back off of that. But you know what? It trailed back down and it ripped through that. So I took a big hit. But now if we don't start making new higher lows and we start making new lower lows, as you can see we are starting to do, then this is a stage 4, guys. That means we're going to continue lower. It's not a good sign, okay? So it looks like we might be starting the FOMC meeting here in just a few minutes. We're expected to start at 2:30. Old Papa Powell is going to come out, and we're going to keep an eye on the S&P 500 when he does that, because regardless of what happens here, he's going to come out and there's going to be volatility, okay? And I want to make sure that I do keep up the news, and we will get a poll up here very soon. So here we go, guys. Old Papa Powell is going to be coming out here in just a second. So stay focused, stay attention, because you know, he might drop that mic. And we're going to look for the news while we're waiting on old Papa Powell to come on out. Oh, yeah. Let's see. I'm going to bring up the SPY news really quick. So let's see here. President Trump on funding freezes says merely looking at waste and fraud paused $1.7 billion in payments to foreign organizations. Fed holds interest rates steadily. Halts streak of Congress cuts. So it is a rate stay. A rate stay.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning plausible, could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
Vote on the poll, guys. Vote on the poll.
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
As I've said countless times over the years, this is who we are. This is what we do.
I'm telling you guys, it is funny to me how the same questions are brought up every meeting. Every time they talk to Powell, he says the same exact things because they ask the same exact questions. It makes no sense to me. I'm mad for this guy.
Lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said.
Everybody's so worried about diversity and inclusion, but in my personal opinion, you need to have the right person for the right job. It doesn't matter if they're black or they're white, they're rich or poor, or they're weak or strong, male or female. If they meet the description and they're their best for the job, for the community, put them in a position to do the best job for America.
Range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now but always. And it's hard to be open to just how how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katarina.
Katarina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our two goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those two things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Same question. If you're going to ask her a good question, leave the president
Nearly
out
2
of
weeks
it.
ago,
He's
the
not
Fed
gonna
said it
answer
was
it.
withdrawing
If
from
you're
the
asking
network for
questions
greening
about
the
the
financial
president
system,
and
even
what
as
he said, anything
even
to
as
do
we
with
have
it.
significant
Come on.
wildfires in Los Angeles,
Come on,
doing billions of
people.
dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as
I'm gonna go
political.
grab a chair.
Why did you leave that
back.
organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that the rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Great way to put it.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt Egan.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
Very important question.
So we look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But, we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So That's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see there's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut, or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid. downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said what we said was that, you know, at times when inflation persistently undershot 2%. We would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And, you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
S&P 500, 600.
For the last
It's at 600 currently.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision.
First time I've heard say anything about crypto
that's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do.
Buy bounce off 600,
Thank you.
heading higher now, 601.73. All right, that concludes our Papa Powell's meeting, the FOMC press conference. I will confirm that he was extremely, and I mean extremely, dovish. He was very, very dovish there. What do I mean by dovish? He didn't say one bad thing. He kept reinstating the fact that he is very, very happy with the numbers that are coming in. He wants to continue to see these numbers coming in. He wants to ensure that the job labor market remains strong, that inflation is still coming down to its 2% level. He seemed extremely dovish, and that's a very, very good sign for the overall market. As you guys can see here, when the meeting started, we popped up, we headed back down, we retested this area of 600, and it looks like we bounced, and we are continuing higher, but we'll see, because obviously short term, we have this downtrend, but we're on the 1 minute time frame. So I'd like to see it get above this and hold above 602.25. It's doing that right now as we speak. Of course, we're looking at the 1 minute though. You always want to zoom out when you're looking at this stuff, so that way we have a better understanding of what's going on. And here's your hourly time frame. We're going to put it on the 4 hour though, so you guys get a better understanding. I drew these regression lines, this channel here, and you can see with the FOMC meeting and everything that has gone on, you can see here clearly that we are right in the middle, guys. We could come all the way down to 585 and bounce. And we could go as high as new all-time highs and continue higher and reject from the top there. So we're looking good, because just as of a few days ago, we hit those new all-time highs. And then obviously, because of DeepSeek and the news out of China, we failed here because we took a huge hit in technology. We took a huge hit in Broadcom, in Tesla, or not Tesla, in NVIDIA, in ARM, in a lot of these companies that are a part of your S&P 500. So we took a big hit. The bigger hit was in the NASDAQ. And you guys seen it. I was a part of it. One of my biggest holdings was AVGO. I took a easy $1,000 loss with AVGO. And then on this bounce, I made probably, I lost 7% that day. We're already back up 2.5%, 3% just in the past few days. And that's without holding tech, because I've explained to you guys multiple times, when we're looking at something like NVIDIA, let me get rid of this really quick, guys. Let me get rid of this. When we look at something like, NVIDIA or anything of that nature, we don't want to be in things that aren't leaders anymore, right? We don't want to be in leaders. So when you're not holding out of those leaders, you feel a little bit more comfortable. So here's NVIDIA, and this right here, to me, the sideways action, If we don't break above this channel, I'm considering this a stage 3, and then we are entering a stage 4. So if we can't get above 130, which right now we are nowhere near it, we're at 122.22. If we can't get above 130, NVIDIA is going to be considered a stage 4 downtrend, in my opinion. Now, if you don't know what stages that I'm referring to, specifically Stan Weinstein stage analysis. And I've been saying this, guys, like, don't marry a stock. This thing has been continually going up off of this $500 area that now it's 50.85 after the split, but I've been talking about NVIDIA after its first earnings came out, and it was a double beat. We had a surprise revenue of $659 million, a 10% increase on a big boat of a stock like this, and it rip, tater, chip to the north side. What happens after you get a move this high, 188% on this big of a $1 trillion stock? Well, after time, you trade sideways because you're overvaluated, you're overinflated, and then what happens? You enter a stage 4. And if you want a more clear and understanding idea of a stage 4, right here, you can see Abercrombie & Fitch. We played this. We made a lot of money on Abercrombie & Fitch. But the issue with Abercrombie & Fitch is it created a channel, it traded sideways, and it broke to the downside. This is a start of a stage 4. Here is your stage 3, right here, in this area, your stage 3. This is the start of a stage 4. So here is your stage 1, stage 2, stage 3, stage 4. I believe that this is going to continue down lower. And the only thing that's going to change my mind on that is if it starts to create new higher lows, okay? So with that being said, we have NVIDIA. We have broken this sideways channel, and I think we're going to head lower. What do you guys think? You know, that's my personal thoughts. That's why we don't marry stocks. That's why we are swing traders. And when the swing is over, we wait. We wait to see what's going to happen. Now, you could argue with me, well, there's still new higher lows here, and here, this would be your new higher low, and we're just going to move this channel here. You know, sure, we are at support. We bounced off support. But my question is, why would you want to hold something like this if it has broken its previous support? For me, this is not a buy until we break this high, this base breakout up here. I don't care what happens in between. I don't care if you want to hold on to it until it goes back down to 0. I don't care what you do with your money. But me personally, I'm a swing momentum trader. This has lost its momentum, and you can even see that with your Market Smith indicators. We're below. Let me throw this on the daily. We're below all the moving averages. The only thing that's above, actually, look at, we're below a 200. We were below a 200-day moving average recently on NVIDIA. That's not, you guys know I do not like stocks like that. We're starting to lose relative strength as well. Anyway, we're here for Tesla here today, guys, and Tesla has a beautiful trend, also creating these new higher lows right here. I was thinking just for entertainment, maybe I take a few shares of this just to entertain you. Maybe we just take one share of this, so that way, hey, I have one share just to entertain you. We'll take it when it's a little bit closer to time. Actually, it's already 3:30, so the numbers are going to be actually coming out very soon. So maybe we just take one share of Tesla just for funsies. So we can go ahead and throw this up here. We'll just let me grab one share of it just for fun. You know, this truly is a gamble. I do not condone to gambling. But anytime we play something like this, it is for your entertainment only. I do not know what's going to happen in the overall market. But just to show you that I did buy one share, we'll just blow this up right here for you. Oops. Let me just show you. I'll bring up my brokerage right here. You can see one share at $390.89 for Tesla. And we're already up a total of 13 cents. Of course, we're only doing this for fun, guys. So that way we all know. Yeah, stink bid. Yeah, I know, the stink bid. I should throw in a stink bid for the after hours. The stink bid, I think, would be at $350. If we came as low as $350, let it grab that stink bid to head higher. But I'm not going to play a stink bid on this. We're just going to play one share. We're going to see what happens with it. Just for funsies, guys. Just for funsies. This is literally a gamble, but, you know, I'm either going to make or lose 20 bucks on this. Give or take. It doesn't matter to me. It's just for fun. It's for the pure entertainment and joy for you all beautiful people. And if you guys haven't already, make sure you hit that like and subscribe button, because I love you. I hope you guys love me back. And that's all you got to do is to react with that like and that subscribe button, baby. What's up, Sarah Sosa? Just say something to move the markets up. Let's see. What should I say? I'm shorting the market, full account. That'll make the market go skyrocket. But no, I will say this. Powell was very dovish. Usually after these meetings, we get a little nervous because the last time that he spoke, the market really came down pretty hard. But he was very dovish. He said nothing but good things. He said the overall market's looking good, that we are at a rate stay. We're just waiting for confluent data to come in to further dictate his rate cut decision. And when we look at the overall rate cut decision, the biggest thing we are looking at right here is this Fed Watch tool, okay? And what I found out, and it was June 25th is when our next rate cut most likely will be. Let's see if it's changed since after the meeting. Yeah, so it's showing here that, our target rate is between 4.25 and 450. And you can see right here, we have a higher percentage chance of reducing that rate by 1/4 of a basis point in June. So it doesn't look like we have much for May, but in June, it looks like we are to cut 1/4 of a basis point. So it's a ways out. Of course, if we still get better data coming out, we're going to see better movement in this Fed rate tool, and we might get something, a bigger expectancy in May. So right here, let's see if May has changed. And actually it did. May did change. We have a bigger expectancy now to come down 1/4 of a rate cut in May now. So he was that dovish, and he gave us that much more information, where May is actually, we have a probability now of actually being down 1/2 a basis point, which would be crazy. So it's very good for the market, and the market is trying to kind of price this in. March, we actually have a 22% chance of coming down 1/4 of a point, but May is looking at our new goal. We're going to watch as the data comes in, and we can look at the economic calendar just to see, really what might change this. I don't think we have anything the rest of this week, but I just go to the economic calendar and investing.com, click on economic calendar. You can switch this so that way it's only bringing up the highest volatility expected, and then you can switch it to just America. So like you see here, we have the Fed interest rate. It was a rate stay of 5.5%, the previous 5.5%, and the forecast was 5.5%. So it's a stay across the board. And we had crude oil inventories coming in here. Unless there's a huge change in crude oil, you don't see much of a change. And there's not much else to come in. We had the durable goods month over month come in a little lower than its previous and lower than its forecast. Didn't do much. Now, initial jobless claims are going to be tomorrow. That is going to determine the rate of unemployment. That's very important. If initial jobless claims come out and it's much, much higher than expected, that's not going to look as if the job labor market is strong. It'll show that cutting those rates sooner will be better. So a higher exchange of initial jobless claims, meaning people filing for that unemployment. If that's higher, then we have a higher expectancy to cut rates sooner, and you'll see this CME Fed tool actually go up, and we'll probably get a better opportunity to cut in May rather than in June. So that's just one thing. We can look at next week as well. So next week we can see JOLTS, the job openings. That's a big one. And I'm sure we're going to see, as Powell kind of touched on it, there's concern with deportation that we're going to have a lot more jobs that are going to be vacant and a lot more jobs that need to be open. So however you want to see that, however you want to take that, if that's true, we're probably going to see this job openings climb a lot higher, a lot faster. But we'll see. We'll see how this works out and how it actually affects the overall market. Then, of course, we have the non-farm payroll unemployment change for January. Of course, this data is always a month behind, so we're going to get in February the non-farm payroll employment data for January. But just so you guys know, a survey is done by the U.S. Bureau of Labor Statistics to help measure job vacancies. That's what the JOLTS is job vacancies. So it collects data from employees about their businesses, employment, job opens, recruitments, hires, and separations, just to kind of understand how many jobs are actually opening up and how many jobs are going to be available to others. So that is in conjunction with the initial jobless claims. And of course, next week, initial jobless claims comes out on Thursday, non-farm payrolls on Friday. So that's just kind of what we got going on there. It's important to keep up on this, especially if you have, if you're one of those heavy hitters and you're holding on to something that you just absolutely need to know when the volatility is expected. It's very important for you to know when these things are coming out. Now, back to our key at hand. First of all, I just want to thank everybody that's in here. What's up, JP? Got a fade? Yeah, it's definitely a fade. You can see my white patch coming in right here. It almost looks like I'm balding, doesn't it? Look at that. Almost looks like I'm balding, but I promise you I'm not. That's just my white patch right there. If I was balding, I'd be shading. But man, I tell you, I was wearing a hat. Like I wear a hat all day at work. I put this thing on, I pull it over my head, and my hair is so coarse and it was so long, it would fold on top of my forehead and it would hurt like hell. So scratchy, so itchy. I know it's probably the worst time to shave my head was on the coldest day here in America, but I had to do it. So I'm always wearing a hat while I'm at work, especially some of these places I go in. So I just had to get rid of the hair and pull that cap over top and let her go. So let's see, updates. Updates you need to get. So I know we are all here for Tesla. Of course, we have just under 2 hours for Tesla and for the earnings to come out. The earnings should come out right after market close. Let me just double check on that. And we are holding Tesla right now. We are holding Tesla. And let's see, when is the data supposed to drop? I know the talk will be, I'm sorry, not the talk, but the earnings call will be in less than 2 hours now, so around 5:30. And we will have the earnings actually come out right after the market. So at 4 o'clock, we will have earnings. At 5:30, we will hear the overall earnings call. So just to do a little bit of technical analysis on this, because I think it's very important, and the whole reason why I decided to take a share, we need to hold this area for a new higher low. So we have this top at 489, right? We have this low down here at 373.50. And what we want to see when we're looking at any of this stuff is new higher lows, okay? Let me make sure I got this up so I can make sure we talk to everybody. So what we want to see is new higher lows. Bro, you seriously holding Tesla through earnings? Why? It looks bad, man. No, hey, it's just one share. I'm only doing this for entertainment. It's one share, dude. I do it for your entertainment. So yes, if I was holding Tesla and I was up over 10%, I would cut over half of my position holding through earnings. But no, I don't usually do this. This is a gamble. Okay, it's for your entertainment, and I do not condone anybody playing before earnings. No ER setup plays. No, I totally agree with you, Momentum Masters, and I'm happy you're here, and I'm happy you're saying that, honestly, because that is exactly what I preach. You do not buy before earnings unless you know that it's a gamble, unless you know it's for entertainment purposes only. Now, but you saying that this looks bad, I disagree with you. We're at a 50-day moving average, and we can see that we are creating a flag pattern here. We're also creating new higher lows. We have 1, we have 2, and we have 3 new higher lows if this holds, if it holds. So I can't agree with you that it looks bad, but I will agree with you that playing anything before earnings is a gamble. And you need to understand there is no process to actually taking a trade before earnings. No process, because the outlook, no matter what, if you buy before earnings and it comes out even as a double beat, the market is trying to price in the future expectations for any stock. So even if we have a double beat and the market loves what it, not loves, but the market has already expected this. If it's not as good as the market thought it should be, this could still fail, okay? And so even if it does, I'm more than happy to take 20, 30, 40, 50, even $100 if this thing does start to come down, because guess what? I don't care. This is for entertainment. Now, if I was holding a lot before this, like we were holding right here, if you guys were with me in the overall or in the Discord, we actually called this trade out right here. But we played on this 360 breakout. We called this out in the Discord. We used TSLL. We played this 360 breakout and we held all the way until it broke its 10-day moving average. If I was still holding this from there, then yes, I would clock out. But that is not part of my process. This is the base breakout play. It's very clear. If you guys know, I like those new higher lows after a big push up and a pullback. I want to see it holding a moving average. In this case, it was the 10-day moving average, and then it gets tight. And it got 3 days tight here, and it broke above a key area. That key area was 360. We held on to this, and we held on forever. Well, what felt like forever. This was more like 2 weeks, and then when it broke this 10-day moving average, we ended up taking, I think it was a 17% gain here. Let me just double check, guys. Roughly 17%. I think it was more like 18% gain on that play. But yeah, so Tesla, it's looking good here. Just trying to hold on to that 50-day moving average, creating new higher lows. So we'll see what happens with earnings. So that's going to be coming out at 4 o'clock. And then, of course, the earnings call is going to be out in the timer just above me right here. The rockets are shooting up towards it. 1 hour, 53 minutes. We're going to see what has to go on there. Actually, it looks like the Geiger counter is not working properly. There we go. 1 hour, 49 minutes, and 50 seconds. So we'll see very, very soon. And we'll see what's going to go down. What's going to go down for Tesla? Let me know your thoughts in the comments section. I know that Sarah Sosa says she's got a call, an options call out ready to strike. And let's see what I got a poll set out here. 50% of you are saying above the 400 today. So right now it's trading at 388.81. And the trend break for me would be roughly that 400. I would say more like 419, 420. We'll just call it 420 for entertainment purposes. If it breaks that 420 area, I'm going to say it's going to go higher. It's going to go higher. That would be a beautiful break. Or if not, that might be the fake out before it comes crashing back down. So we'll see very, very soon if Tesla does want to get above that trend break area. Okay, so vote on the poll if you haven't already. We've already got 16 votes. 31% no, that it'll head lower. 6% say polls are for small chins. I hope you don't have a small chin. It feels good having a large one. And 12% say you're just here for the show. So cheers to you. Cheers to me. Let's have a sip. We get a little while to wait. So if you guys have anything that you want to look at, let me know in the chat. I know old B. Stewie had plenty going on. Of course, we're holding Google still, creating these new higher lows. I had a gentleman reach out to me. Actually, I had 2 or 3 of you reach out to me. When we had that big sell-off in the tech, he said, what's going on with Google? What's going on with your Google trade? You know, it's very, very simple. I got in at a good price. I played this trend breakout. I was holding around 191.41. I still am holding. Actually, let me see that exact price so I'm not giving you the wrong price. Okay, we're at 192.19. So 192.19. So somewhere in this area, I took this trend breakout. I liked it and I held, right? And so this right here came down and it's still holding its trend. Not only that, but it's also holding new higher lows. You can see it. Here's 1. Here's 2. Oh, I'm sorry, right here. Here's 2. And right here is 3 new higher lows. Okay, so when I see those new higher lows and I see a beautiful trend like this, then what am I looking for? A basing pattern, just like I just showed you on Tesla. Right back here. Here is your basing pattern, new higher lows, 3 new higher lows into a base, and then bada bing, bada boom. You'll be making money soon, okay? So I'm holding Google, and when we had that pullback in the tech because of DeepSeek, this thing didn't budge. It still held its trend line. It's still shown that it is still a beautiful trade. So until it breaks this trend, before it breaks this low, I'm going to hold on to this trade. No, I didn't add into it. No, I did not reduce my share size. I like the way Google looks, and I'm going to continue to hold on to Google until it shows that the bears are in control. But right now, if we zoom out, we have a cup with handle. The bulls are 100% in control, now creating a cup with handle with 3 new higher lows and a basing setup. To me, this is a double whammy. So if you don't like it, then that's okay. You don't have to play it. This is my money. These are my trades. They are not yours. We're also holding APP. Why am I holding APP? Well, again, we have a basing bottom, new higher lows, and a basing breakout right here. Okay, so I like APP. Let me see where I'm holding at so everybody can see. We're holding it at 344.53. So right just below this mark right here. I took it just before that basing breakout, and here we are. We're in the money. Only $65, but no big deal. We're in. We made a couple bucks. Let's see. Google, we're up $72. You know, nothing big. Let's see what else we got here. We're in Reddit, RDDT. Let's take a peek at that. Well, what is this? Well, look at this. You have this basing structure with new higher lows. 1, 2, new higher lows. But what I like is this 7-week consolidation. I'm sorry, I think this is more of a 3 or 5 week. 1, 2, 3, 4, 5, 6. No, I was right. That's a 7-week consolidation. And then we have a basing pattern forming at the top at 180. Where did I take it? I'm holding it at I'm sorry, let me look at Reddit, RDDT, 180.35. So I took it right at that basing breakout. We use that previous day's low as our stop, and we're almost at 1R currently. So if you don't understand 1R, watch my do not blow up risk management video, and you'll understand what 1R is exactly. And let's see what else we're holding. We're holding a Rocket Lab and DEC. So we'll take a look at those in just a second here. So what's going on, Smaid? It's good to see you, brother. Tesla to the moon. We'll see, man. We'll see. It does have a nice setup on the daily time frame anyway. I don't like it that it's just under that 50-day moving average, but we'll see. So Rocket Lab, RKLB. Let's see. So this is creating those new higher lows. We have a trend right here that it's trying to hold. I do want to get rid of all of my anchored VWAPs on this. It's making it look kind of doo-doo. So you can see we have a nice trending pattern. We have a base right here at the top. You don't see it. I'll point it out to you. This is your basing area. What I don't like is what I like to see, I guess I should say, is I would like to see it come up and get tighter, just like you've seen on Reddit, right? That makes it look way better, or Google, or Tesla, you know, right here where it gets tight right underneath it. But, you know, you can't always get what you ask for. So when you look at something like, what am I looking at? APP? No, I'm sorry. Let me go back. Reddit, sorry, RDDT. I didn't really care for, you know, this quick break. No. What was I freaking talking about? Oh, Rocket Lab. I'm sorry. RKLB. I don't like these breaks as quick. So I waited for it to pull back and I bought in on this pullback. This is a retest, right? So I'm not going to take this basing breakout because it's just too fast, too quick. It gets too extended. So I waited until yesterday when it came down and it retested this $28 area. I think I picked it up at close to 20. So 28.50 was it? Let's see. Yep, 28.50 here. So that looks really good. I like it. I like the bounce off this area. If it breaks this area and heads lower, I'll probably exit for now. But right now we're holding Rocket Lab, we're holding Reddit, we're holding Google and App, and we're also, of course, we're holding VU. We got an awesome price on VU. I was buying up all down here. We're still holding on to VU, and we're not going to let VU go. Not without a fight, we aren't. And then, of course, we have DEC. So DEC's a bit slower of a move. But we are holding DEC. Do I even need to tell you, after everything that I just said, there were 2 plays on DEC. There was the trend breakout and the basing breakout. What I like mostly about DEC is this. This is called an undercut and rally. And it not only undercut its full base, but it undercut this previous low and then rallied right back up that same day and got back in its channel. That shows me that institutional ownership is waiting there to buy it. It kicks out all these weak hands, and then institutional ownership comes in, they step in, they buy it all up, and then it broke this trend and it broke its base. Okay, so I have a small share in DEC. I'm only up like 52 bucks in this. The average price is $214.50. So you can see I bought it $214.50, just above this basing breakout. I tried to play somewhere around this, so $214.50, yeah. So right after it broke above its all-time high, I got in, and then I held. I held using this as my guide. This 21-day moving average, you can see, it's used this 21 as an area, a structure to buy back up. So that's just my plays. That's what I'm holding. We'll see. You guys know I only like to watch leaders. And Tesla right now is not a leader in the market since it's below a 50-day moving average. We're going to see. We're going to see what it wants to do for earnings. I'm not a big fanboy of Tesla or anything like that. Of course, I like what they're doing. But I don't think so much their cars are what's going to be that drives them. It'll be their robotics. So if we can get a lot of attention on their robotics, that would be a great sign. It'd be a really, really good sign for Tesla if they can, get that going. So let's check out. Let's ask ChatGPT. We're going to go to ChatGPT. So what is most important for Tesla's earnings? So let's see. Most important, obviously, revenue growth and margins, vehicle deliveries and productions, energy and AI segments. So that's what I want to get to. So energy business, solar and storage, megapacks, and Powerwall growth are important to Tesla. Diversify revenue streams. So that's one thing that a lot of people don't realize is it's all about the batteries. It really is. The better your batteries are, the longer your cars can run, the more competitive it is with gas. Full self-driving, and if you guys have noticed, there's been a lot of updates on full self-driving. Any updates on adoption, licensing deal, or regulatory approval could impact the stock significantly. So you might see some of that in the financial results and the question and answer webcast that's actually coming up at 1:40. So we'll see how that looks. Of course, guidance and outlook is always a big one. You might have a double beat or you might have a double fail here, and then it comes out on their earnings guidance and outlook that they are looking to expand and make way more money because of the deals that are possibly coming up. And if that happens, you're going to see the stock just start to take off. And then there's, of course, those macroeconomic factors. Of course, I don't look too much into the macroeconomics of things because I'm a swing trader. Of course, macroeconomics can affect your swing trading, but usually it's over a lengthy amount of time. But this is for EV demand trends, especially in China, where Tesla faces price wars, competition from BYD or legacy automakers. And I think that's a big one here. I think the legacy automakers like Ford, GM, Jeep, those places, they're still doing well. They're doing very, very well. And they're actually starting to make these hybrids. So it's not full electric. It's not full gas. They're somewhere in between. And I think that's what a lot of people are leaning towards, where you're getting best of both worlds when you're getting a grouping in that sense. Okay. So I think Tesla here, it could go both ways. Of course, what I do like about Tesla right now is it's got a relative strength rating of 98. That's what I like about Tesla. It's strong compared to the market. So even when the overall market was pulling back, this thing has just been doing its own thing, right? The overall market's heading up. Tesla is heading up. Now, in the past few weeks, Tesla has been just trading sideways. It's range bound right now. But if you guys remember, this thing came off of this low. It's created what could be considerably a stage 2 uptrend. Let's go to the weekly, though. We always want to look at that weekly time frame because here's the thing, guys. It hit a new all-time high here, and if you look at the weekly time frame, as long as it holds this uptrend here, that's a really good sign that it could continue higher. Now let's look at the daily time frame and throw our indicators up, And you can see, this is what I don't like. I don't like it being below this 50-day moving average, or at least it's lingering around there. Today could change all of that. It really could. It could change all of that. We'll throw on some lo-fi music. We'll sit back, relax, and wait for the numbers to come out, baby. Those numbers should be coming out, I would say, in about 7 minutes. We're going to get the numbers out. Things are going to get very volatile. We're going to go ahead and let's go ahead and put this up on the green boards here. Of course, if you guys are just joining me, if you're new to this, thank you so much for joining me and supporting the channel. I do appreciate you guys being here. We're going to give you the news first, right here, right now. So make sure you strap on your seatbelts. I think volatility is imminent. I think it's going to come very, very soon. And we're going to see if Tesla has what it takes to get back above those all-time highs. So we'll just throw this on the 1 minute time frame here to make it very interesting for all you beautiful, beautiful people who love to be entertained. So those numbers will be coming out very, very soon. We're definitely going to keep a close eye here. I want to be the first to have this information for you. I have my markings right up here at the top. We're down about $2 in this one share trade. It's just pure entertainment. We're not trying to get rich off this. We're just trying to entertain your beautiful souls. I can even mark this out for you. So we have a visual 390.82. So we'll go ahead 390.82. So on the 1 minute time frame, you can see right here, we have smacked into that anchor or that VWAP area multiple times. See how we've smacked into it 1, 2, 3, 4, 5, 6 different times. That's not a good sign on the 1 minute time frame. That's intraday. Now on the daily time frame, it doesn't look nearly as bad because we're holding those new higher lows. But if we're just looking at today, this is not a very good sign. It does not look good at all today because it cannot get above VWAP. Okay, you always want to be above that anchored weighted volume price, that volume weighted average price. All right, so we'll see if Tesla can do that. We got about 4 minutes and 30 seconds left till the market is over. It's done, son. And then that's when Tesla's numbers are going to come out, and we're going to get a better understanding of what is going on. We've got already 72 views on the show. That's a beautiful thing. If you're watching me and you haven't already, hit that like, hit that subscribe button. We do this all the time, baby. We at least put out 3 pieces of content, and tonight is going to be one of them. We're going to have a Discord meeting. I have a lot to go over. We have a lot of aerospace and technology stocks that we need to go over because it is a hot commodity. And actually, since the day I had started this YouTube channel, B. Stewie has been preaching aerospace and technology, which I think is funny because it has been doing very, very well. Of course, there's been times when aerospace and technology has not been doing that hot, but it is still held new higher lows, new higher lows, and we are still continuing to look at those aerospace and technology stocks. So we'll see very, very soon if that is going to happen. What I do think is amazing, though, for the overall market is the fact of how dovish Papa Powell was. That was very, very cool. Was not expecting that, to see just how dovish he was. Everything he had to say was very positive. You can see we're mixed across the board. We're hugely down in NVIDIA. I've been telling you guys about NVIDIA entering a stage 4. We're down in Tesla today. We're down 1.41% currently. Meta looks really good. Google looks really good. Microsoft, not so much, down 0.5%. LLY, Lilly, up 2.45%, so 2.5%. Amazon's about flat. We got a lot to look at. We got a lot to go over. We got a lot to do today, and I am pumped and happy to be here. If you guys haven't already, vote on the poll. We got the numbers going to be dropping very, very soon, so I hope you guys are ready. Yeah, baby, I see it. Smashing that like button and the 100. I see it. I'm going to send it right back. Thank you guys so much for being here. We got 12 of you in here. Make sure you vote on the poll. We have 50% of you say above the 400 today. Above the 400 today. 33% say no, it will break 372 and head lower. So here's our 400. That's higher than today. That's where we kind of smacked into and headed lower. And 33% say 372 or lower. So that's actually lower than where we're at today. So are we going to break above or below today's highs and lows? That's the real question. And we have a vote for 50% of you say above 400, 33% say below 372, 11% say you're just here for the show. This one is for you. So cheers. Thank you for joining. Thank you for being here for the show. I hope I can entertain you wildly. And of course, we have 6% of you saying polls are for small chins. I hope you don't have a small chin. I hope you have a large chin because it feels good to have a large chin. All right, the market is getting ready to close here in about 1 minute, probably about 30 seconds for you. You're just a few seconds behind because it is YouTube. Dovish, thuggish bone. BC, I don't know where that's coming, but yeah, it's the dovish, thuggish bone. I hope that doesn't mean anything bad. I'll get canceled because of you. I know where you live, kinda. Anyway, guys, the market is closing here in about 40 seconds. I hope everybody had a green day. I don't have my phone on me to check, but I think last time I checked, I was up like maybe a 0.5% today. Nothing big, nothing small, but happy I was able to be in the market today. We got Tesla. We got London on the track, baby. Tesla is going to be popping off at the mouth with something it shouldn't have said. We got the live news up here on the bottom so that way we know exactly what is going to happen. A different Powell emerges. Fed Chair Powell softens hawkish tone in interest rates in Bitcoin. That's exactly what I said, guys, and now we're getting the stories popping out here. It's so true. He was not hawkish at all. He was very dovish, it seemed like. And the bell's over. We're going to see what happens. We're going to be right here when the news comes out. Let's stay focused, stay attentive, stay alert. I promise you I will give you the numbers as soon as I see them. We might have a few minutes before they actually come out, so we will see very, very soon. But of course, the earnings call is coming out in an hour and a half, so be very attentive and alert for that. Zamora says close. We are closed, baby. We're going to wait. We got to see what's going to happen with these overall numbers. We already got 77 views from you. I do appreciate each and every one of you being here. The numbers will be coming out soon. And then the earnings call, of course, in an hour and a half. I'm pumped and excited for that. But yes, Fed Chair Powell came out and he actually spoke a little bit about Bitcoin, about banks and Bitcoin. I mean, it was very interesting because even when he came out and he said something about Bitcoin, I said, he's not going to talk about Bitcoin. You know, he's only worried about the dollar. He only cares about the dollar. He said multiple times in previous Fed meetings last year when, if you guys were with me, he was saying, you know, I'm not concerned about Bitcoin. It's not something that I concern myself with. All I've concerned myself with is interest rates and the job market, the job labor market. So keeping those strong numbers, keeping the interest rate at a 2%. I'm sorry, not the interest rate, but the overall inflation at 2%, a consistent 2%, and making sure that we have good job labor demand. Those are his two mandates, and he preaches about those. But today, when they asked him about Bitcoin, about banks buying Bitcoin, he said, we have done a stress test on the banks, and who am I to tell them what they should or shouldn't buy if they are easily able to handle themselves in a downturn? So he's basically giving his, his blessing basically and saying, you know, why would I say whether it should or it shouldn't? Why should I tell the banks whether they should or shouldn't buy Bitcoin? Which is very, very different tone. He's very soft. He's very very dovish when it came to Bitcoin this time around when somebody asked him about it. So I've never heard him say anything like that. I've never heard him say anything like that. Was new today. That was very, very new. But yes, his dovish tone really is good for the overall market. It didn't send the market, you know, skyrocketing to the north side, but it did definitely help the market out. Now in the after hours, boom, we're starting to get a smackdown here, but we're going to be focused on Tesla for now. We'll keep an eye on the overall market. very soon because we have different numbers coming out. Microsoft is earnings today too, and you can see right here, Microsoft just took a huge smackdown. Their numbers have not came out yet, but you guys stay tuned. I'll keep an eye on that as well. But Tesla's earnings should be coming out very soon. It's crazy to see Microsoft really selling off here. They went from the close of 442, they're already down 424. So they lost 20 bucks right there in just a matter of seconds after the market. And you can see Tesla right now still fighting, still doing its absolute best here to hold those lows, creating new higher lows in the 1 minute time frame. But if we look at the hourly, you can see we want to hold this area because we want this to be the new higher low. If it breaks this 379.22, which it looks like it's very close to doing right here, very close to doing, if it does break this area, that's not a good sign for Tesla. It's not a good sign at all for Tesla. I'd much rather see a double bottom or an undercut and then a quick rally reset, a quick rally back up here. So we'll have to wait. We'll have to see. It looks like it is breaking that area. That's not a good sign for Tesla. So we'll see if it wants to eventually hold. Where are the numbers? That's the real question. Where are the numbers for Tesla? We need to see those numbers come out very, very soon. And of course, you guys know I took a fun little bid here. We're down about $8 in this bid, and then bam, we get bought right back up, and we're gonna see. We got a little bit. We're waiting on those numbers to come out, and then of course the earnings call in 1 hour and 25 minutes. So I hope you guys are ready for that earnings call. It should be interesting as we are already starting to get some volatility. This might just be a play off of Microsoft as Microsoft headed lower. Right there, Microsoft came out EPS 3.23, beats the 3.1 estimates. Sales 69.6 billion, beats the 68.78. So it had a double beat here. Why they headed lower, I have no idea, but it looks like Microsoft does well. It comes out, it pulls out some of those stops. Now we're just waiting for Tesla to come out. This might be falling back because Microsoft fell back, but we'll have to wait and see. Who knows why exactly. So Momentum Master says, damn bro, I told you never fight against the 50 EMA. Yeah, man, you know, I agreed with you. You must have left when you left, but we're doing this for entertainment, and you got to understand nothing has came out yet. Nothing has came out yet on the news. But yeah, we had an undercut all day, not holding that not holding VWAP at all, and so you know it was looking very weak on the overall daily time frame. As long as it doesn't break those previous lows, which it looks like we didn't double bottom. So yes, Tesla is now looking weak, but if the earnings comes out and we have a double beat, we'll see if the market likes it or not. But yes, we are very aware, Momentum Masters. He says, eat my shorts. Well, thank you for keeping it clean, brother. I'm proud of you. I'm very proud of you. So I hope you made a lot of money, Momentum Masters, on shorting that, because I'm sure you put your money where your mouth was and you made some money, brother. Congratulations to you. So here's Tesla trying to find a bottom, and here we go. It just came in here. Tesla Q4 2024 adjusted EPS 73 misses its 76 estimates. Sales at 25.7 billion. It misses their 27.26 estimate. Why would it say a miss? Okay, the sales 25.7, miss 27.26. So the numbers are out. We're getting a small bounce on that, which is surprising because it's a double miss. So Tesla's reported quarterly earnings of 0.73 per share, which misses the analyst consensus estimate of 76 cents by 3.95%. This is a 2.825% increase over earnings of the 0.71 per share from the same period last year. The company reported quarterly sales of 25.70 billion, which missed the analyst consensus estimate of 27.26 billion by 5.71%. This is a 2.15% increase over sales, blah, 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 blah. So it looks like they have a double miss, so that's not a very good sign for Tesla. I'll go ahead and throw these numbers up here for you. So let me copy that, and I will share these on the Let me show this on the text right here for you. Hope you guys are enjoying this. There we go. I got them up at the top of the screen for you. Let's see, Momentum Masters. This is why we never trade nothing, not up on the weekly. This is why never trade nothing, not up on the weekly. Maybe you should go back to school so we can understand what you got to say. Hashtag eat my shorts. They probably smell like cat. No, thank you. So we're going to go ahead and get rid of this live news. So things are looking a-okay. We're getting a small bounce off this. Of course, I'm not expecting with a double loss here, this bounce is going to be short-lived, probably sell back off, but nobody really knows what's going to happen in the market. And if anybody tries to tell you that they do know what's going to happen in the market, they don't. And they're acting like a guru. They don't know. They just don't know. So don't believe them. Of course, all we can do is take the data day by day and see who is in control. And currently, the bears are in control. You guys can see here, we created this huge push of momentum. We found a bottom. We created new higher lows here, and then we broke this bottom. So that is not a good sign. It's showing bears are in control. And if we do not get back above this area, we are looking like this could possibly be another new lower low, and it could very well continue lower. So be very, very careful with Tesla at these lows here. Now, an undercut of all of this, if it continues to rally, that would be a very good sign. An undercut and rally, shaking out all the weak hands. But in the way I trade, my process, we need to see new higher lows, a trend break, and for it to continue higher. We got the trend break here, but it broke that area, creating new lower lows. That's not a very good sign for the overall market. I want to head back to Microsoft. Let's see how they're doing. Yeah, this thing really pulled back here as well. Let me go to the 4 hours so we can see a little bit more understanding. So they're still holding. They're still holding their uptrend. They're still creating new higher lows, which is a good sign for Microsoft. Even though they had a big pullback, even though they beat, they still had a pullback, but they're still in a good trend. But yeah, Tesla is not looking so hot. IBM, Joseph says, is up. That's a good sign. That is a very good sign. We'll take a look at IBM. IBM on the 4 hour, really rip tater chip in here. So let's see what IBM, their 3.92 beats their 3.75 estimate. Their sales of 17.55 beat their 17.54 estimate. So that's very nice for IBM, creating this break of this all-time high. That's a beautiful sign. Now trading at 250. So IBM looks like it's up and away. So good for IBM. We'll come back and take a little peeky gander at IBM very soon. I just want to see where Tesla's at on the bounce. This undercut, it's starting to rally a little bit. Again, most likely a short-lived rally unless it continues higher and gets back up into this area, cutting all the weak hands out. So we have the earnings report at the very top there, so you can see it for yourself. We're definitely going to come back to Tesla, but we have a lot going on. It looks like IBM, wow, what a beautiful push now at 253. 253.80, bouncing off this area. It moved up. Let me get this up here, guys. Moving up over 12.83% with an average daily range of 1.8%. That is a huge push for IBM. Look at that. What a gigantic move for IBM. Very, very nice to see. Tesla here still rallying off these bottoms. We're going to see if it wants to continue higher. And Microsoft, of course, is still also rallying off those bottoms. So we're going to see what wants to hold, what doesn't. We got three that we're keeping a close eye on. Let me know if you guys are watching anything else in the after hours right now. Of course, if I run through my trades, APP app, the trade that we took at that basing breakout, still doing very well. We have DEC, which looks like DEC must have had a little bit of volatility there, right there in the after hours. It moved right on up and came crashing right back down. Let me just see what's going on with that. Okay, so that was just during the day. I was mistaken. So a beautiful move higher and then it pulled back. We're still at previous days, but still looking very good overall for DEC. We played this basing breakout here, as you guys can see. Google, let's see if Google moved on any of that. Google looks like it's holding up very well, still creating those new higher lows. A beautiful trend to the north side, still holding up very well. Let me get rid of this because this is actually a basing pattern right here. I know a lot of you guys took this basing breakout. I played the trend breakout back here. Beautiful move. And then, of course, we're playing Reddit. It looks like Reddit still this basing area. We're up. We're up, baby. We're doing good, baby. Things are looking good. Absolutely love it. And then we have Rocket Lab. Rocket Lab's just kind of lingering around like some bad breath. And then Tesla. So Tesla is still trying to rally. This whole one share, we're down a whole $12.53. Looks like I get to starve tonight. No lunch, no dinner for me tonight. And then, of course, we're still holding VU, where we bought up all around through these lows. We're up $213 on the overall S&P 500. So we're still doing good. We're still making money. We're still up for the month. We're still up for the year. Things are looking really, really good. But always heading back to Tesla now. It looks like Tesla is not going to rally back up. So we'll probably end up selling that in the morning after we see what happens. But we did it for entertainment, and it was a good time. Make sure you hit that like and subscribe if you can get behind this beautiful, beautiful trading strategy that I have. Swing traders, strategists, momentum traders playing trend-based breakouts. We do not like to play before earnings. Always keep that in mind, guys. That is a gamble. If you're doing it, it's for pure entertainment or gambling purposes only. And we have so many stocks that we're going to look at tonight. Why? Because you always want to update your leaders list. And here is that beautiful pullback that we were just talking about after a huge pull back. Why my charts are going wonky, just bear with me. Oh my goodness, this thing. There we go. And just like we said, it came right back up. What did it hit? It hit VWAP and pulled right back down. Just as we were talking about, after a big pullback like this, momentum relief rally, and then it comes back down. We're gonna see, will it create new higher lows and start to get back up? We have plenty of other to look at, like IBM. Beautiful move. This thing is absolutely kicking off with 1.8% average daily range. This thing really took off. It made 13.3% move in a matter of 3 minutes. We're going to see, does it want to hold this area after a move this high, moving 13 times, well, less than 13, we'll say 10 times its average daily range in just a matter of 3 minutes. So real OGs trade IBM. But of course, you don't trade before earnings. You're going to want to wait till after earnings and see if you have an opening range breakout on the 1 or 5 minute time frame. If you use that strategy, that's what works for me, but I always wait till after earnings to do so. So IBM is looking good. We might have a trade tomorrow. It might be a trade tomorrow. But of course, with let's look at this on the daily time frame at 258. So you guys can see here, this thing has been just creating new higher lows, new higher lows. It's not beat down. This is not considered an episodic pivot by Christian Quilamagi. A lot of people get that confused. Just because it's moved up a decent amount, it doesn't mean it's an episodic pivot at all. This has obviously been priced in, and then there was a small earnings beat unexpectedly, or this would have been priced in as well. So not an episodic pivot, but it could be what we consider a stock that is in play. That is under stock B, stock in play type of momentum burst trade. So if you guys want to play that, we're at new all-time highs. That might be something for tomorrow. Of course, I only focus on trend and base breakouts, but it is looking good. Let's go back to look at Microsoft. So on the daily time frame, you can see we're holding those new higher lows. And if we move into the 4-hour time frame, you will see right here that we pulled right on back, but it still held this new higher low here, and it's still continuing higher. So let's go ahead and take a look at old Tesla. Uncle Tesla breaking that low. Not looking good, trying to rally here. Not expecting it to continue to rally, but it is nice to see. Now, Tesla is coming out with its earnings chat. It's going to have the earnings call here in about 1 hour and 13 minutes. So we're going to see very, very soon. I will say NVIDIA has been much more popular on earnings streams and all of their, their CEAs and CMEs and all their different catalysts. Of course, we're going to stream their quantum computing. Of course, after what he said about quantum computing and making quantum computing crash, but we were ready for that. We were talking about QBT and how there is no earnings for QBT. This is a garbage stock. We're looking at IONQ, and even though it's the leader in the overall quantum space, we talked about quantum and how it just does not have what it takes because there is no earnings. We looked at a lot of these things, and I constantly said, you can be a part of this rally. It's a hot sector. It's creating new higher lows. It's definitely tradable. It's day tradable, intraday and swing tradable. But when push comes to shove, you have to have those stop losses in place, because if it does start to fail, this thing's gonna fall fast. And sure enough, it wasn't even the next day that ended up happening. I didn't know it was gonna happen the next day, but we know when something doesn't have anything to show for, eventually it is going to fail. And sure enough, it did. So we'll see. As Tesla's getting a little bit of love back above that previous low, is it just shaking them out, or is it going to continue higher? We're going to see very, very soon. As you can see, we have a big wick here on the bottom, very big wick off this bottom. Very nice to see if you are holding. Of course, just holding one share, it could really care less which way this goes, but we're having fun with it. Let's see, in the active trader, we're down a whole $12. So unfortunately, I don't get to eat dinner tonight. I will starve. No big deal. We'll see very, very soon. Hey, one thing I do want to say is a big shout out and a big thank you to everybody who watches these things all the way through, and everybody who watches my YouTube videos. By the end of the week, I will have my full watch time hours in. I want my full watch time hours in, so I'll actually be making money off the ad revenue. I'm very happy to say that. We've been working for quite some time to do that. We started this channel about 3 or 4 years ago. I stopped for about a year and then started right back up, and then we got a lot of attention. We have an amazing community. We have an amazing Discord. And of course, if you want to be a part of that, there's only 2 things I require, and that for you to have a golden heart and an open mind. We like to learn there. We like to get better each and every day, and we do not put up with any riffraff. You will obviously be kicked if you are a spoon-fed Mickey Ficky. We do not spoon feed. We train traders how to trade. We give you a template to show you what process looks like and risk management. When you pair the 2 things together, then all you need to look for is discipline. I'm not trying to sell you on anything. I'm trying to teach you how to become a better trader. So if that like-minded trader, go ahead and hit that subscribe button and join our Discord. The link is in the description. So Tesla now kind of evening out here at 378.14. We're going to see what its guidance wants to look like, what it wants to give us on all of that good stuff. Tesla's Q4 non-GAAP earnings revenue rise, shares down are after hours. Let's go ahead and take a look at this. Analyst surveys by FactSet expected 77 cents. Revenue for the quarter ended December 31st was $25.71 billion, up from $25.17 billion a year earlier. We're still getting some new news on this here. Revenue for the quarter ended, analyst surveys by FactSet expected $27.26 million. Company shares were down 3% in recent after-hours activities. Yes, sirree, Bob. And you can see here, if we measure off of that, it went as low as 6%, and now we're rallying back up. We're only down 2.31%. We're going to see. Is this a big shakeout? I mean, if you look at the 5-minute time frame, this is just a huge wick. Yeah, Sarah, we are watching IBM as well. Yeah, the thing rip tater chipped to the north side, so that's really good for IBM. That's definitely really good. I hope was my lo-fi music playing the whole time, Papa Powell? No, I hope it wasn't. I hope the lo-fi music wasn't playing while Papa Powell was talking. I'm sure one of you guys would have told me. But yeah, IBM absolutely doing some kick-ass stuff. As its earnings flashed, IBM posted its Q4 adjustment. EPS was 3.92 versus the FactSet of 3.78. So they definitely beat on that. And their software revenue from 7.29 versus the analyst consensus of 7.29. So that was a break even. The consulting revenue of 5.18 billion versus the consensus of 5.24. So a little lower there. But yeah, better than expected Q4 results for IBM. Wolf had earnings as well. Let's take a look at Wolf and see what happened there. It looks like they had a nice beat. Wolf Speed Q2 2025 adjusted EPS is 0.95. It beats its 1.02 estimate. Sales 181 million. It beats its 179.90 estimate. So they lost in their second quarter, lost their shares at 2.8. So it's looking good for Wolf Speed, at least on a technical basis. They're at least popping up here. Let's look at the 4-hour and see what that looks like. We're still downtrending. It's still not looking good for Wolf. So this is garbage, absolute garbage, downtrending here. They're trying to get above this area, but like I said, guys, I want to see new higher lows be put in. If it breaks up here and pulls back and creates another new higher low, that might look like something. But when we look at Wolf Speed on the overall time frame, all the way as back as 2023. So the whole year it's been downtrending. This thing needs a huge change in characteristics for it to head higher. Let's take a look at Tesla, still soaking off that bottom here, now trading at 380.74. So we're almost back up to where our closing area was. I'm sure some of you out there, if you're holding shorts and talking shit, you're probably getting a little nervous right now. Hopefully you took profits if you were shorting Tesla. And when I say shorting, I'm saying, never mind. You know where I'm going with that. All right, let's keep on keeping on. I just want to run through my stocks really quick to see where we're at. Of course, APP still moving up in the after hours, looking very nice, creating another base on top of base. If you guys don't know about it, in William O'Neill's book, can you see it? There it is. William O'Neill's book with my beautiful hand models. Just clip my nails. Anyway, my little Trump hands. He talks about base on top of bases. And you can see we have a base right here at 345. This is where I took the trade. And then we have another base forming right here. That's a really good sign with new higher lows. So if it wants to take off at this base, its next area of resistance is going to be right up here at this psychological and technical area of 400. So we're going to see very, very soon if that wants to hold. Of course, we're holding DEC. This DEC, we're still in the money on DEC, but it's just a slow mover. It doesn't have enough alpha for me. So, you know, we're going to have to give it some time. Joseph says now negative 10%. Which stock are we talking about? Tesla still? Google trading at 195.20, still holding out, looking good. Oh, look at that. Would you look at Tesla? It soaked all the way back up, and now it's right where it closed. Right where it closed. That's why we don't talk shit in here, because anything can happen. Now, of course, it can run right into this area, and it can be considered resistance, and it could fail. But right now, we are actually in the money by $1. So we'll see if this wants to hold out. And if it wants to continue higher, but I'm sure nobody's going to pop in here and say, you know what? Sorry, I talk shit. I don't know what I'm talking about. Nobody will do that, ever. People just like to be angry because they lose money constantly, and they're going to blame it on somebody. RDDT looks really good in the after hours, though. It looked better during the day. I guess it's not doing too much in the after hours. We're looking at the 4-hour. If we look at the 5-minute, you can see it is getting a nice pop here, too. Google's holding off. That's looking good. Rocket Lab actually looked like it took a nice smack down there in the after hours and soaked right back up. Let's see. And Uncle Tesla. Look at Uncle Tesla now, getting back above that area, now at 396.75. We're going to see if it wants to continue higher. This is an area of resistance for it. There's a big blocka area right here of resistance. This is where I thought we would see the most amount of resistance. So if it could get back up and start to head above this, that would be a really good sign. But to be honest with you, I see this having a hard time getting above this area. We're going to see if it does, in fact, want to. Anything can happen. And let's see if there was any more news that's coming out on Tesla. Nope, the last thing was the Q4 non-GAAP earnings revenue rise, but the shares are down after hours. So we still have some stuff going on. Now, stock in software sector, big company. Oh, okay, let's take a look at Now. Oh, so you were saying Now as the ticker? I thought you were saying Now negative 10%, like Now Tesla or Now Microsoft or Now App, one of the stocks we were talking about. You were actually talking about ticker symbol NOW. Yes, it's down 10%. This is a big sell-off in this software giant. So let's look at the 4-hour time frame. You can see it actually comes all the way down here at this area of support. It's double bottoming at 1,000 even. That'll be interesting to see if it will hold this 1,000. Let's take a look at the live news. It says it's expanding its workflow data fabrication capabilities with new Oracle autonomous database. So it looks like there's some positive news about that. Their Q1 subscription revenue actually it was between $2.99 and $3 billion. Yes, they are a very big group. ServiceNow and Google Cloud expand partnership to bring Now platform to Google Cloud Marketplace. Let's see, their reports fourth quarter and full year 2024 financial results. Board of Director authorizes additional $3 billion for share repurchase program. That's a really good sign. This might be a nice buy the dip kind of move in this stock. So very nice pullback. Its Q4 subscription revenue, $2.87 billion. It actually was greater than its expected. Things are looking pretty good for this stock. So the pullback that you see here might get quickly bought back up, but we'll have to see in very due time if it does. So let's take a look at Tesla now. Wow, goodness gracious. I hope Momentum Masters sold his fake shorts here because he's hurting now. I hope you're okay, buddy. I really do, but you can see we're starting to pop back up here. We're much higher than where we left off all the way down here at the bottom. And we don't try to act like we know which way and which direction it's going to go generally, but we just like to use the technical data. But that's why we do not play earnings, because earnings are wild. You never know what's going to happen, but you've seen a huge sell-off here. So right as the market closed, we had a huge sell-off. We went down 6.67%. which is very fast because its average daily range is 5%. And you can see we just popped back up here and we're up over close to 5% up. So we went both ways. We move over 10% on this stock in the after hours. And you can see here we are in the green. So let's take a look at my active trader here. And it looks like we're up lunch. Now I can have dinner tonight. You don't have to worry about me. I get to eat dinner. And my wife won't beat me for losing $12. So cheers to that. Cheers to that. But we still have a long way to go with 1 hour left, and the Tesla earnings will be coming out very soon. So if you're just joining me now, thank you for joining me. Hit that like, hit that subscribe button, and of course, answer the poll. We've already had 20 votes on this poll. Will Tesla break trend and goes? Will Tesla break trends and goes higher today? Wow, I wish I could edit that. I sound like a complete and utter dumbass because of that. But hey, 45% of you said above the 400 today. 35% say no, it will break 372 and head lower. 15% you said you're just here for the show. Cheers to you. This one's for you. And 5% say polls are for small chins. Well, I hope you have a small chin and you voted on the poll. Anyway, we're sitting at 404.24, so the 45% of you that voted are currently correct. The people that voted 372 heading lower, you were also correct at one time. So we're going to end that poll. We're going to start a new poll, and we're going to try and spell things right. What should the question be here? What should the question be here? Will it close? Will it close above 400? Let's start a poll here. Will Tesla close above 400? And we can make a simple yes, above 400. No, below 400. Hashtag eat my shorts, or just here for the show. There we go. Let's start the poll here. All right, there we go. Will Tesla close above 400? Oh, I can't say above 400. Let's see, end of day. We'll say end of day. Will Tesla, bear with me here, folks. Will Tesla end the earnings call above 400? Yes, above 400. No, below 400. Hashtag eat my shorts, or just here for the show? There we go. All right, we're going to do this poll. Give me a vote on the poll. Let me know what you guys think. Are we going to end the earnings call, which is less than an hour now? Are we going to end this earnings call above 400, below 400, eat my shorts, or are you just here for the show? If you're here for the show, thank you so much for being here. I absolutely love doing this. I love everything in the market. I love stock bubbles. I love talking about, I was just listening last night about the first stock bubble and where the word bubble came from, what it was coined from, and it was like all the way back from like 17 something. They were talking about, if you got scammed, that you got bubbled. I don't know why exactly they called it bubbled, but I thought that was very interesting. But I just love hearing about the emotion in the market, and you see it each and every day. If you've been a trader for any amount of time, you know that there's oversold, overbought conditions. That's why I like using RSI from time to time. That's why I like using the moving averages, because it helps kind of even those out. The moving averages kind of just give that thought or that sense of, okay, this is where it's headed, where if we get a huge pull back, then you can at least say, okay, but we're holding a 21, or we're holding this area or that area. And you can see on the daily time frame here, we were holding that 50-day moving average. Right at the end of the day, though, we were just below, which is never a good sign in the market when you're below a 50-day moving average, because the institutional ownership loves to buy that up. So if they're not buying it up and institutional ownership isn't buying it up, then why would we want to? That's definitely a huge thing there. You don't want to be buying up if the institutional ownership does not want to be buying it up. But right now, we're at an area of resistance. I marked that area out for you, and it looks like we're above that area. That's a great sign. So our next area is going to be, well, right where it's at, guys. 407.50, we can see used to be support. When we break below support, it then acts as resistance. So 410 is the next area to get above. Do you think that it can get above 410? I sure hope so. The question really is, are we going to end the earnings call above 400? We got 4 of you to vote on it. Let's see if we can get a few more votes. I'd love to see that. And today's going to be a good day. We got 55 minutes until that starts. And then, of course, tonight we have a Discord meeting. We have a lot to go over. We have a lot of stocks to go over. Definitely want to keep a very close eye on that. Here's the 1 minute time frame for you folks that really need that entertainment. You can see right here on the 1 minute time frame, if my charts stop messing up. Right here on this 1 minute time frame, things are looking pretty volatile as we headed lower. Now we're creating a high tight flag on the 1 minute time frame. Of course, on the 1 minute time frame, they're much less likely to work out. I like using the 5 minute for those high tight flags, and we have not set up a high tight flag on the 5 minute time frame. I am really getting sick of these charts on Thinkorswim. I really am. But we're going to see. We're going to see. Doesn't want to hold above that 400. I think that's a key area for about everybody. I think that is a key area. We got 67% of you say yes above the 400. We have 17% say no below the 400, and 17% say eat my shorts. Goodness gracious, great balls of fire. I want to see how my stocks are doing, as APP looks like it's just holding off after a nice push higher today, right at that area of 360. Well, let me check that price area. 368 is that price area, guys. If we can get above that 368 and we do it on volume, which I really see it coming, because we've been ramping up the volume the past 3 days. If we look at the 5 minute, we've been ramping up volume at the base breakout. We ramped up volume to get up to form a new base. We held a new higher low, and now we're ramping up volume right at the end of the day. My best guess on APP is that we are going to break out and head much, much higher. Now, the question is, how high can we go? Because in about 13 more days, APP is going to have earnings. And you guys know I don't like to hold through earnings unless I at least have a 10 to 15% buffer, right? So once we get up above and we hit those new all-time highs, I will exit half of my position. I'd like to do that before earnings. If not, I'm gonna have to cut my full position before earnings because we do not gamble, we do not condone to that unless it's for pure entertainment. And if we do it for pure entertainment, it's for very, very low risk, meaning I'm not going to risk, you know, more than $100 to gamble on something like that. You know, I rather just save my money, take my family out to a nice dinner, okay? Of course, DEC, D-E-C-K, I don't watch this thing in the after hours because it's not liquid, there's nobody trading it. But you can see it's down a little bit in the after hours. Google, on the other hand, just kind of trading sideways. RDDT, a beautiful move up today, kind of looking like APP where it pushed up higher on volume, and now it's just trading sideways. I'd like to see it continue. We played the base breakout here, a beautiful, beautiful move on that base breakout. Rocket Lab kind of taking a hit in the after hours, and Tesla at 403.30. We're up on that one share of 12. We're up $12.50, so we'll see very soon how that does. And of course, VOO, the long-term account. I try to do this to show you guys how to do a long-term account, how to make some money as the market pulls back. If you don't know what to do when the market pulls back, I'm usually risk off when we're below a 21-day moving average, and I'm surely risk off 100% if we're below a 50-day moving average. And when that happens, if I have a hard time sitting on my hands because it is very hard to be disciplined, what do I want to do as a trader? I want to trade, right? So what do? I buy VOO and I hold. It's a long-term hold. There is no long-term holds for me unless it has to do with ETFs. That's VOO, that's QQQs, that's IWM. Those are long-term type of holds. I only use the VOO, sometimes the VTI, but mainly VOO. And you can see here, I started buying this thing up. It was somewhere around December. So, and through the month of January, we bought 3 different times. I'm sorry, we bought on that first break. Yeah, so from December through January, I've been buying this up as it stayed below the 50-day moving average, and now we're up about $222. It's nothing crazy. You know, it's nothing crazy, but it's just something that I like to do because why not? You know, if you plan on buying and you plan on holding and the dip keeps on dipping, then I just keep on buying it, right? I don't care if we go into a bear market. If we do, I just keep on buying more of it. It's that simple. So that's my strategy on VOO. Every time we get a new low, a new lower low, I buy more. You can see here, if you zoom in on this, you can see I bought on this low. When we hit a new low, I bought it in the pre-market because we were much, much lower. And then when we hit this low, I didn't have time to end it up, oh no, I'm sorry. When we broke this and made a new low here, I bought again. By the time I actually seen it though, it was a little later, so I just ended up buying it. So we bought 3 different times there, and you know, it's paying off for us. It's paying off, and I'm just planning on to continue to hold until I need more funding, but we have a nice size account, so I can just leave the, how many shares do I have? 15. I got 15 shares at my average price is $539. So if we do the math on that, if I need this capital, I can just sell this, you know, but $539. So I'm holding about $8,000 worth of VOO. So if I need that $8,000 for whatever reason, I'll just sell this. I'll use that $8,000 to buy something more speculative. But until I need that money, I'm just going to hold on to it. We got plenty of buying power right now in this account. Reddit, we're up about $212 on. VOO, we're up about $213 on. Tesla, we're up a whole $12 on. Rocket Lab, we're down about $36. Google, we're up about $33. DEC, we're up about $43. And APP, we're up about $65. So overall, we are up on the year. We're up on the month. We're up on the day. So everything's looking really good for myself, and I really hope everything's looking really good for you. Let's go back to Tesla and see where it's at. We're trading at 403.11 for Tesla with 48 minutes left to go. We're going to see here if Tesla wants to get to ripping. I am actually really surprised that we aren't getting more people piling in here. Are people not as excited as they used to be for Tesla? That's the real question. You know, are people more excited for Microsoft? I tell you, I'm not that excited for Microsoft, even though they are looking very good, you know, creating new higher lows, holding moving averages. You know, it's a good sign for Microsoft, especially after the big hit the tech industry took, like in NVIDIA. Let's take a look at NVIDIA, see where it's. So it's getting a little bounce in the after hours. That's a good sign because it really pulled back today. It gave back a lot of those. So, you know, I wonder, what do you guys think? Do you think NVIDIA actually holds this 200-day moving average? That's a really good question. You know, personally, you know, I don't know. I don't really care. Right now, it's not acting as a leader, so I'm not looking at it as a leader. What about Broadcom? AVGO is Broadcom. You can see here it's well below its moving averages, but trying to hold this 50-day moving average. It's creating new higher lows now on its 50-day moving average. This is looking a little bit more constructive than NVIDIA is, in my personal opinion. Now, if you look at something like ARM, ARM is also trying to hold that area of support above the 50-day moving average and trying to hold that area of support. So that's a good sign. Now let's look at something more speculative like AMD. So this is your lagger. It's well below 200-day moving average. It's not doing well at all. Today it did well against everything. Zamora says Meta. Yeah, let's take a look at Meta. We have identified Meta as a leader for quite some time. Oh, Meta just came out with their earnings. Very, very nice. Look at this. Very volatile here. Trading at 670, but got as low as 639. Let's take a little peeky gander on this. So 639 is the low that it got. Wow, below, but still hold a 21-day moving average. And now trading at 680, which is its just above its closing price. So it's still trading right up there at its all-time highs, which if you guys remember, we pointed out this trend break right here. Look at this beautiful trend break. Absolutely beautiful. Look how clean that trend break was. We called it out in the Discord, that trend break here. And of course, if you didn't want to play Meta, you could have played METU, which is a 2x leverage of Meta. And sure enough, we're getting very, very good action on Meta right now as it just headed much lower. It got soaked up and bought up around that 21-day moving average, just below the 10, in between the 10 and 20-day moving average, and then soaked right back up, now trading in this area here. So yeah, Meta, a lot of volatility here. Let's see what Meta's, let's just take a look. Q1 2025 total revenue, $39.5 billion. Between that and 41.8 billion versus the 41.71. So that's a good sign. Sees the 2025 total expenses, 114 billion to 119 billion. Sees capital expenditures between 60 and 65 billion. Meta Platforms Q4 GAAP EPS $8.02 may not compare to the 6.77 estimate. Sales for 48.39 billion beat its 47.03. So that's good news for Meta. Its guide for Q1 revenue is between 39.5 and 41.8, between its consensus of 41.7. So we'll see. That's not really much bigger than the previous year. So 2025. And now, so, they're kind of like at a rate stay, or not a rate, I got Papa Powell in my head, not a rate stay, but they're kind of just even in keel there, so that's not like the best forward guidance in my opinion. Meta reports fourth quarter and full year 2024 results, so we can just read these here. SERV is serve SERVE, you're saying, Zamora, is that ticker SERV? Let me know. I can look right now for you. And then we got to go back to Tesla. No, I don't think you're talking about Serve. Let's see, Tesla. Tesla's still holding up here. Tesla's still holding up. It's still looking very good. It looks like it's wanting to create a high tight flag here, getting some soaking wicking candles on the bottom on that 5-minute time frame. We'll see if it wants to hold out. Just reading their. So 2024, 48, 2023, 40, 21% change, 24, 164, 2023. So a 22% change, that's good. Beat on their costs and expenses, 8%. Income from operations, they beat by 43%. That's really nice, actually. 48% from 23 to 24. Operating margin a little lower. That's good. Income taxes, about the same. Net income, here we go. So their net income, they increased 49% over the year and 59%. Let's see, over the past 12 months, they've increased 40. Let me see, 1 second. 59%. Wow. So Meta's really kicking ass and taking names. So that's really good. That's really good to see for Meta, especially because, you know, it's in the overall market. Let's see how the S&P 500 is holding up. You know, the S&P 500 just kind of trading sideways here, guys. After all that volatility that we got, it's really just chilling. It's just sitting there sideways. So that's really nice to see. Really nice to see. Let's go back to Tesla and let me know if there's anything else going on, guys. I'd be happy to take a look for you. We have 42 minutes until the Q4 and full year 2024 financial results for the question and answer webcast for Tesla. So make sure you stay tuned for that because I think the earnings call should be interesting. Maybe we'll hear from the man himself. Do me a favor. I got to go get an energy drink. All right? That's right around the corner. I can still chat with you while I do this. But, you know, I need a little pick-me-up, if you will. I've only had one energy drink today. I'm lying, I've had two. But I'm gonna grab one more and maybe a little snack. Maybe a little snack for Tesla, okay? Little Reese's peanut butter cups. Now, you know, I like a deal. I like a deal, and I hope you guys like a deal too. I found these bad babies right here, Reese's peanut butter cups, for $1 in the clearance section at Speedway. So, you know, your boy being the trader that he is, I always like a deal. So I got me a delicious king size Reese's cups. There's 4-banger. This is a 4-banger for $1. Bam. Yeah, beat that. Beat that, baby. Tesla's trading at 402.80 right now. Looking absolutely a scrumdiddlyumptious. Let's see if we have any more news. 90% of Tesla's story is about AI and autonomous driving, says Wedbush Dan Ives. Is that all you got to say? Looks like they got a video here. I'm not going to listen to that. But yeah, 90% of Tesla's story is about AI and autonomous driving. They want to be a part of the future. Tesla's Q4 earning highlight revenue miss, EPS miss, EV update. Automaker says 2025 will be a seminal year. Let's read about that. Electric vehicle leader Tesla, ticker symbol TSLA, reported fourth quarter financial results after the market closed. Here are the key highlights. Tesla reported fourth quarter revenue of $25.71 billion, up 2% year over year. So that's not very big. You want to be a leader, you want to see 25% year over year, 25% month or quarter over quarter. Okay, so 2% is not very good, but let's continue reading. Let's see. The company reported fourth quarter earnings per share of 73 cents, which is a miss on a street consensus of a 76 cents. Automotive revenue totaled $19.8 billion in the fourth quarter. That is down 8% year over year. Yeah, I put that in there for you, Momentum Masters, so you'll actually vote on the poll, brother. Eat my shorts. And I hope you I hope you're still not shorting, bro. I hope you're not shorting because I'm up, dude. I'm up and I don't even care. I can at least eat my dinner tonight with the whole $12 that I made trying to entertain your ass. So, Momentum Masters, quit leaving and coming back. You need to be a part of this crew. Hit that like and subscribe button, you turd. Tesla's fourth quarter profits rise slightly. Let's keep on reading, though. You covered my shorts as Tesla was going up. Yeah, good for you, brother. I'm glad. I hope you made some money on that short. I really do. Because below the 50-day moving averages, I have to agree with you. If we're below a 50-day moving average and institutional ownership aren't buying it up, that's not a good sign for Tesla. So I hope you did cover. I hope you did well, and I hope you made some money. Automotive revenue totaled $19.8 billion in the fourth quarter, and it's down 8% year over year. That's not a very good sign if you're down on one of your main sellers. Tesla says its revenue was impacted by growth in energy and services, growth in vehicle deliveries, and higher regulatory credited revenue, reduced selling prices, and had a negative impact on the company, it said. The company had 11.0 gigawatts of energy storage deployed in the fourth quarter. Tesla previously announced its fourth quarter vehicle production. I don't know why I'm way over here reading this. I can bring this over here. Let's see. Tesla previously announced its fourth quarter vehicle production and delivery figures. The company produced 459,445 vehicles and delivered 495,570 vehicles in the quarter. While the delivery set a record in the fourth quarter, the company's 1.79 million vehicles delivered in 2024 were down from 1.81 million in 2023. This was the first annual deliveries decline in company's history. That's a very, very key point there, guys. Very, very key point here. And as I talk so negative about Tesla, it continues to go higher, which is very interesting. We expect Model Y to once again be the best-selling vehicle of any kind globally for the full year of 2024. And we have made it even better with the new Model Y now launched in all markets, the automaker said. Tesla highlighted affordability being the top mind for consumers. The company said its cost of goods sold per vehicle hit its lower level over less than $35,000 in the fourth quarter. For the full fiscal year, Tesla Automotive revenue was $77.1 billion, down 6% year over year. Full year total revenue was $97.7 billion, up 1% year over year. Tesla ended the quarter with $1.07 billion in digital assets, which includes the company's Bitcoin or BTC holdings. The company previously disclosed $184 million in digital assets in the recent quarter. The company said it recognized a mark-to-market gain of $600 million on digital assets in the fourth quarter. Wow. No wonder why they're up. They have really bought quite a bit of Bitcoin there if they're up $600 million in that. What's next? Tesla said its AI training compute increased by 400% year over year in 2024. The company said it's planning to begin FSD launches, which is full self-driving, by the way, launches later this year in parts of the United States. So they are saying that they are releasing their full self-driving in parts of the United States this year. For an update on vehicles, the company's earnings report lists the Cybercab as being in development, the Tesla Semi in pilot production, and the Roadster in development. 2025 will be a semi-annual year in Tesla's history as full self-driving supervised continues to rapidly improve with the aim of ultimately exceeding human level of safety, the company said. Tesla said it expects its vehicle business to return to growth in 2025. So they are expecting, Tesla said it expects its vehicle business to return growth in 2025. So they're thinking that the return, the growth, the numbers will start coming back in 2025. The rate of growth will depend on a variety of factors, including the rate of acceleration of our autonomy efforts, production ramped at our factories, and the broader macroeconomic environments. The company said it has sufficient liquidity to fund its product roadmap. Product plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of 2025. Tesla said the new vehicles will be produced on the same manufacturing lines as existing vehicles, which will lead to less cost reduction than previously experienced. The Cybercab robotaxi will pursue an unboxed manufacturing strategy and is set for volume production beginning in 2026. Tesla's price action, Tesla stock, well, we already know the price action because you got it right up here in front of you. With 33 minutes left to go, I hope you guys are ready. B. Stewie's back. Had parent-teacher phone conferences. Hey, that's cool that they do it on the phone. I still have to go and do it in front of them and explain why my kids are little hellions. No, I'm just kidding. I got really good kids actually, and they got good grades, and I'm very proud of them. So, what do you guys think about all this? I mean, I just read you guys like the whole thing here. It looks like their vehicle production this year is down 8%. That's their main kind of gig here, right? Tesla's its vehicle production. And they're saying that it's going to continue to go higher. There's a lot of different things that come to effect. I think macroeconomics is a big one. I think, there was a lot of, not to speak about any specific group, but I think they were really trying to hold back a lot on what he could and couldn't do, where he could sell, where he couldn't sell. But I really feel like there's a shift in America. I feel like everybody got really excited about full electric, and now everybody's kind of liking the fact that we're both. We're hybrids, where we're using both electric and gas now to work together. And people aren't so much looking specifically for a full electric vehicle, but I think on the positive side, he's looking at cyber trucks, he's looking at cyber cabs, where these things are going to have full self-driving. And he's already posted and tweeted about full self-driving. And I do think it is the future. Of course, he always what should I say? He always over promises. He does. So if he's saying, cyber cab is in development, and the semi in pilot production, and the roadster's in development, and he's talking about, in 2025, he's going to be releasing this stuff. When? Will it be 2025? Because we've heard all this before. We really have. We've heard all of this out of Elon's mouth before. How much of this can we believe? It's kind of like China, and whenever they come out with a piece of data, how much can we believe? How much can we really believe here? Let's do this, guys. If you guys haven't already, hit that like, hit that subscribe button. You know the deal. I don't need to go on and on about all that bullshit, but you guys know. It does help me out a lot. And here's my link tree. If you want to find me on any platform, whether it's our Facebook strategies group, which is absolutely awesome, join that Facebook group. There is zero spam in there. I think I found one piece of spam, and we deleted the guy. We're up over 400 people in our Facebook group. So if you want to be a part of a growing Facebook group that has amazing moderators and amazing traders who give advice, Jolene, sweet Jolene, she's amazing woman. She talks and creates and curates these beautiful outlooks on her trading journey and why the struggles, what she's focusing on. And I don't know how she does it. She comes up with something new, something that she's always working on each and every time. It's very, very clean, crisp, articulates it very, very well. I absolutely love reading about it. So if you click on that link tree, you'll get something that pops up that looks like this. Of course, you can go to my YouTube. If you go to this YouTube, you're going to find out that I have some amazing videos on Trading School. You want to learn about technical analysis so you can understand what we do, how we do it, why I take base and trend breakouts. That's going to be right here. You're going to take a little peeky gander at this. Watch that technical analysis. And of course, if you don't know anything about trading, you should, after technical analysis, watch my risk management video. This is very, very important. This is when I take trades, why I wait for the expansion to contract, so that way if I am wrong, which I am wrong, and I've been wrong because I am a good loser, and you are a loser unless you're learning, right? You need to learn if you are going to lose. You only lose a little. And when you win, you let those runners run so you can maximize your profits. If you can have a process and a strategy in place, that's what we teach here, okay? And of course, if you want to click on this Trading View, it is a very beautiful platform. You can paper trade on, you can set your brokerage to. I use Trading View each and every day. This is what I've been using here right in front of you guys. Beautiful, beautiful thing. I just use my my brokerage account in the after hours because it's a lot cleaner in the after hours, but you guys don't need to worry about that. Of course, here's our Discord, but use this Trading View, download that. It's absolutely free. And then if you want to upgrade to the Essential plan, it does help me out. Of course, I have an Instagram, a TikTok. This is our Facebook, guys. This is what I was telling you about. This is Swing Trader Strategies, man. We have so much cool stuff. Right here is our updated 2x leverage. So if you guys don't know what 2x leverage is, let's say you want to buy Amazon. Amazon, is very, very expensive. If we look at Amazon, Amazon's trading at $235, right? So maybe not as expensive as a Meta. Let's look at Meta. Meta's at $682 right now, right? Let's say you want to play Meta, but you don't want to spend $682 because you have a small account. You can look at METU, okay? And you can play this momentum trade for $44.50 a share rather than Meta is actually at 682. So you can actually still play that, but you just need to understand what average daily range is, meaning if it moves one specific way. So here's Tesla, it's at 402, but if you use TSLA, you can actually get it for 2644, and you could have played this same process with a 2x leverage. It moves 10% rather than that 5%, okay? So that's my thoughts. I just wanted to give you guys a little bit of understanding of what our swing trader strategy was all about. It has a lot of different things. This is just one. This is our updated leverage. Here's Jolene talking about the trader's edge, a weekly health insights for peak performance and avoiding vices. Absolutely amazing. Daniel, it looks like there's one comment on here that says that I drive him to drink. Goodness gracious, Daniel, I hope not. Hopefully it's water, right? Hopefully it's water. A little section on Deep View. I'm sorry, I keep calling it Deep View. Deep Seek. Daniel and I go back and forth on, our opinions on Deep Seek. So it's nice because you get both sides of the story. It's always good. We talk about books, what good books you can have. And, I could go on and on and on, guys, about just how amazing our Facebook group is, because it really is. It truly is an amazing Facebook group, and you guys need to be a part of that. All right, so right back at it, Tesla. We'll go back to Tesla. Let's see what the price action is we're sitting at 402.40. We're above that 400 psychological $400 area. That's a really, really good sign for the overall Tesla to be trading above that. It climbs, let's see, Tesla's 4Q revenue climbs on energy generation and storage gains. So let's just read about that because that's very, very important. It's something I just kind of skimmed over. And do keep in mind, we have about 26 more minutes and that earnings call is going to be coming out. So I think it's very important that you guys stay tuned. How hard can it be? Says, what do you think about URI considering wildfires and floods? Is it a little loud? We'll turn it down a little bit for you. There you go. It should be down a little bit for you. Let me know how that is. So you want to know my thoughts on URI. So first of all, we need to understand what URI is, right? So if we look up URI, you guys will see right here, URI is finance, rental, and leasing. Let me read about it for you. First of all, when I just glance over the revenue, the net income, the margin, all that stuff, you can see that they're clearly making money. They're making money annually and quarterly. So that's a good sign for URI. And if we scroll down here, well, let's read about it. Let's figure out what this actually is. It's United Rentals Incorporation engages in the equipment rental business. It operates through general rentals and specialty segments. The general rentals segment include the rental of construction, aerial and industrial equipment, general tools, light equipment, and related services activities. All right, so I'll tell you right away, my very, very first opinion on this is it's clearly uptrending. But the issue with this uptrend is that it has broke this uptrend and then broke a 200-day moving average. All well, we have an issue with, okay, well, what about the wildfires and what about, them needing more rentals and using this, all this stuff? Are we talking about all those houses burnt down? So are they in the houses? Are they in the houses? Because if I had to guess, because nobody really knows. If I had to guess looking at this, I would say that they probably lost a lot of money. The insurances aren't going to pay for all these fires, and that's why they failed during this fire, right? And so if you don't see a nice volatility pop to the north side, they're probably hurting because of the fires. They're probably hurting because of the fires. That is my guess. I don't truly know this. But if we hit the wildfires and it breaks down, right? It breaks down, it's trying to hold a base and then pops back up, but it's creating a new lower low, meaning we have this high and we have a new lower low here. So that's not a very good sign. It showed me that we might be in a stage two. We might be entering a stage 3 where it's going to trade sideways, and then we'll have to understand what we're going to do from there. How hard can it be? Says they provide equipment for cleanup and rebuilding. Yeah, absolutely. So I'm a technical analysis trader. When I specifically look at this chart, I would say, no, I would have to wait. We want to see new higher lows. We want to see more expansion. We'd want to see a big move like this right here. So here's a basing breakout right here, big move up, and it pulls back, and then it creates this cup, and then it breaks out, right? And it's actually on earnings. Then look, you could have seen another basing area, and it breaks out again, moving higher. Look at this, absolutely beautiful. But now it looks like it's starting to break down. It did bounce off that area, but unless it creates new higher lows, for me, this thing's just a given. You know, it's up in the air. So here's URI in the after hours. You can see, you know, it's not doing much. We're kind of just downtrending. So my personal thoughts on URI is we're kind of stuck in the middle here. It's kind of a guessing game. It's not setting up a trend. It's not setting up a base breakout for me. So the trade's kind of off the table. You know, I don't really care for URI. And it's a really slow mover. So if you look at it, this thing only moves 2.3%. You're not going to make a lot of money trading URI unless you put all of your capital into it. You know what I mean? At $740 a share, you know, you would need probably a $100,000 account to take a sizable amount to actually move your account. So, you know, a lot of people don't have $100,000. I'm blessed to have that in my account to be able to trade something like this, but I still want to put my money in URI. Now, I will say this, they do have earnings. Earnings is probably coming out here really, so they just announced their record fourth quarter and full year 2024 results and their 2025 outlook for growth. It announces a 10% increase to quarterly dividends, which is a good sign, and they're going to come out with much more stuff. Their dividend up from 1.9 share. They raised it to 1.79 share. So that you know, when earnings comes out, which I don't think it's fully out yet. Let's see, quarterly cash dividend. They're talking about their cash dividend. Okay, so they did bring out. So let's see, they had missed. They missed on their estimate and their sales. So that's not. They did have a sales beat, but they missed on their EPS estimate. So that's not a good sign for URI. And they're already downtrending, and they broke below a 200-day moving average. So personally, when I look at this, I don't care for it. I think that there's better stocks out there. I really do. Like, I have a leaders list that, especially tonight, we're gonna be going over that leaders list tonight at 9 p.m. We're all gonna get together in the Discord. B. Stewie is one of those people, and we're gonna be going over our leaders list. We always keep a leaders list handy. URI is not on my leaders list, okay? So that's just my thoughts. I could be completely wrong about this, but I'd rather you look at something like a Root, R-O-O-T, where it just had a beautiful trend breakout and a base breakout. This is absolutely stunning. I kind of missed this trade here, but I do like it. I might take it in the morning if it doesn't get too far away from me. Also, there's like Rocket Lab. This thing has beautiful earnings. It's really kicking ass. And it broke this base breakout. We have, let's see, Reddit. Reddit had a beautiful base breakout, absolutely amazing. And we have 20 minutes, yes, 20 minutes, B. Stewie, until the Tesla earnings call. So maybe we should focus on Tesla and all of its biddings here. So we'll bring Tesla back up here. We'll zoom in on that 5-minute time frame, and we will get it, baby. So I'm very excited to see this. This is the 5-minute time frame. Let's put this on the 1-minute time frame to see if my charts will hold still. Hopefully they don't. Oh no, there they go. They always wonk out on the 1-minute time frame. I don't know what it is about the 1-minute time frame in my charts, but maybe it just does not want me looking at the 1-minute time frame because I've been hurt. I've been hurt a few times before on the 1-minute time frame. I don't usually look at it, but because we are a show and because we are entertainers, we always want to be sure to give you the closest view, the most volatile action with 19 minutes left to go. I am pumped. I'm excited. I hope that everyone here is happy to be here. I had a couple of beers when I got home, some Bud Light Lime, some girly drinks, if you will, but now we got the good stuff. We got the monster. The monster's out, baby. And I'm getting blinded by the light. It's all good, dude. It's gonna tan my head. You see that? That's great. I love it. I hope you guys are entertained. I hope you're here. I hope you're ready to have some fun, because I tell you what, this Tesla is looking very scrumptious up here at $400, creating new higher lows. If it can stay up and above this area, that's a good sign, because it undercut its previous low and then rallied right back up. So if it can hold that, that'd be a good sign. Let's see. How hard can it be? Copy that route and Rocket Lab. Okay, I'll watch for the leaders list. Yeah, baby. I will be in a meeting at 9. Can I view the Discord later? You absolutely can, dude. You absolutely can. Just join up. It's always going to be recorded as long as you hit that. Troy, I hate you, bro. You always come in here and mess with me, man. I love it. I love it. White Claw and a Monster can. Yeah. Oh, man. Nope, not a White Claw for me. Although this Bud Light Lime is pretty close to a White Claw, right? It's like watered down Bud Light with a splash of lime in there. But no, it's Monster, I promise. With a pinky up. Anyway, guys, I know I sound like a broken record, but we have 17 minutes until Tesla's earning call comes out. It's not just the quarterly earnings, but they're going to go over the Q4 and full year 2024 financial results. They're also going to have the question and answer webcast. So we're going to see what happens there. We've already had 119 views. Our stay rate is not very high, so I hope that you guys hit that like and subscribe while you are here, because I am doing this all for absolutely free. I'm going to have to stay low or that light is going to kill me. Maybe we stand up. I got myself a little snack for the earnings, and we always have the book on hand. If you guys don't know already, I recommend this to everybody. We have over 100 stock market on the weekly time frame technical analysis on leaders. This is all about leaders. This seriously is just an amazing book. You need to study this each and every day. I like to go over at least one where I read about it. I look at, the first one I pulled up is Home Depot. When Home Depot first came out, just all the volatility that starts to come in, its earnings starts to come in, how the market started to turn around, and it's RS on the market, just continued higher. I mean, this was an absolute beautiful chart, and you guys can see, you can just go through it, you can study it. This is an amazing book, and I don't get paid to tell you that. I tell you this because I like to train traders how to trade. And the very first start is expanding your knowledge. You need to have a better understanding of what is going on in the market, and the best thing to do is learn from an 8-figure trader like William O'Neill himself, okay? So make sure you guys do that. Don't be uneducated. Don't be ignorant to the fact. What you need to do is get educated. Quit playing penny stocks. Quit trying to get rich quick, because this isn't a get rich quick scheme. This is definitely something that takes a long time to do. And we're gonna go ahead and bring this table up. I don't know if you guys can even see it. Yes. We have this desk here for a good reason. It goes up and down and up, and I need to bring it up because that sun is trying to beam me in the face, trying to blind me, man. But absolutely beautiful. We'll set you guys back up top here. Oh yeah, much better. What do you guys think? A little better? Oh yeah, there we go. We got London on the track. We got 15 minutes. 15 minutes left, that's it. The wife is going to get my children right now. Beautiful woman. She loves the fact that I am doing this, and she is supporting me by doing this and help my kids out. B. Stewie says, Brains is going to get fire from that. I know, man. That's why I stood up, because that thing is just ridiculous. The sun is just going over the woods right now, just past the window, just going over the woods, and that makes me happy, because then we can sit back, relax, and listen to the questions and answers. B. Stewie says, great book. I have read it 3 times. Need to read it another 300 more. You ain't kidding, man. You really can't overread this book. There's always snidbits. I follow a lot of 7- and 8-figure traders on Twitter, and one of them, constantly is bringing up and highlighting, because this, as a swing trader, this is our Bible, right? You need to highlight, you need to mark pages, you need to figure out, and memorize some of this stuff. Like the first thing I memorized in this was CAN-SLIM. CAN-SLIM. I'll even read it to you while we're waiting, because we got 13 minutes. CAN-SLIM is an acronym, and it stands for what you need to look for in the leaders in the market. So CAN-SLIM. C is for current big or accelerating quarterly earnings and sales. A is the annual earnings. You want to see those around 25%, quarterly over year over year. We have N, newer companies, newer product, newer management. That's a big one. Newly highs off properly formed bases. And we talk about this all the time. If you have a base and it breaks that and it's a new all-time high, That's a really good sign that the market is going to continue, or not the market, but the overall stock is going to continue higher. That's why I've been preaching about Reddit RDDT, because it is a base breakout to seek new all-time highs. That's a very, very good point there, okay? Then, of course, supply and demand, big volume at key points. I talk about it all the time. If you're going to play a trend or a base breakout, you want there to be volume there. If you don't have volume on these base breakouts or these trend breakouts, it's not being backed by institutional ownership or other people who see it. If people don't believe in the stock is not going to continue higher, okay? So it needs to be backed by institutional ownership. It needs to be backed by the institution's volume. And you'll see that in the charts, okay? Leader or laggard. You guys, I've been preaching about this for the longest time. For the longest time. The reason why I preach about that is because for a long time, I was trading any trend and any base breakouts. But I kept finding that these trend and base breakouts were less likely to work because less people are watching them. Sometimes they work, sometimes they don't. They need to have a pretty good catalyst to work, okay? But if you find these in the leaders and you identify the leaders and you focus on the leaders rather than what is lagging. For example, if you want to play Tesla, play Tesla. Don't play Lucid. Don't play Rivian. They're laggers. They're shit stocks. There's no reason to play these. And there's a reason not to play these, because if Tesla fails and it starts to come down, then you better believe Rivian and Lucid, they're going to fail harder, faster. So focus on the leaders, not the laggers. Identify the leaders, not the laggers. And we're going to be doing a lot of that tonight in the Discord meeting, simply because we want to see who the leaders are in aerospace, who the leaders are in retail, okay? We want to see those. Tesla now breaking that $400 area just slightly. We're sitting at $398.17 right now. Next in Can Slim. So we did CANS, and so now we are on, we did CANSL. Next is that institutional ownership. He calls it institutional sponsorship, okay? That means that institutions are sponsoring. They're giving money over to the stock. And you want to see that. And you can go to Yahoo Finance to see who is buying these. It'll show you right in there. Tesla obviously has a ton of institutional ownership. You're going to see Vanguard and BlackRock. You're going to see a lot of your institutional ownerships buying this stock up because it is very big. It's what people want, and you want to make sure before you invest in something like this. Now, of course, with Tesla having an 8% reduction, they're not doing so well, in their quarterly sales and stuff like that. This isn't a stock that you want to invest in. This isn't, you can, don't get me wrong. This could be a great play. It might be a great swing trade play, but under the Can Slim rules, this isn't a stock that we would really watch. And we don't have it on our leaders list because of that reason. But there are plenty of other stocks that we do have on our leaders list because it does meet that criteria and it does have the institutional sponsorship. Yes, this does have institutional sponsorship, but it does not have everything that this thing is asking for. And the last thing, something we always cover every single time that we start a show or bring up the leaders is the market direction. That's the M in Can Slim, market direction. We always talk about market direction. And as you guys can see right here, if we look up the S&P 500, which I've been using for years and years, the S&P 500 on a daily time frame, let's bring that up. You can see anytime we get below a 10 or a 21 or a 50-day moving average, I stay out of the market. But once we get back above, I go risk on. And we were risk on right here. We made a bunch of this money. This was a huge pullback. We watched the bounce happen. We're still risk on, guys. We're still holding because all of my leaders like APP, like DECK, Google, Reddit, Rocket Lab, those trades still held their ground. So I buy the leaders, we hold, and then we manage those leaders, okay? So market direction, it's trending higher. We are below a 200-day moving average. We are above the 10, the 21, and the 50-day moving average. So we are going to keep on trading accordingly. Now back to Tesla, guys, because we have about 8 minutes 8 minutes when I can sit back, relax, and have myself a snack while we listen to the question and answers, the full Q4 and full 2024 financial results, and of course the Q4 for the Tesla Q4 and full year 2024 financial results, and the question and answer webcast is coming up in less than 10 minutes, guys. So I hope you guys are ready and excited. I'm very, very excited myself. I even got myself my White Claw in a Monster can, so it was hidden, so nobody knew. Yes, the sun is getting the top of the dome. It's on fire right now. It almost looks like a filter when it comes over the top of you. I think we'll cut the lo-fi music right now. We're gonna cut that lo-fi so I don't forget about it. And then, yeah, you know, if Elon Musk wants to come out and talk today, I'll allow him to do that. I'll hand him my microphone. I'm a nice guy like that. When this does come on, I would like a mic check. Of course, we have a question. I want you to vote on the poll. We got 9 votes and 12 of you in here. So you need to do me a favor. You need to vote on this poll. It's really simple. Will Tesla end the earnings call above 400? Usually these earnings calls are between an hour and a half. So I'm guessing by 6:30, this earnings call will be over. So will Tesla end its earnings call above 400? Right now, we're sitting at 399.84. So will it be above 400? 78% of you so far have said yes, above 400. 11% say no, below 400. 11% say eat my shorts. You guys are gross. And then 0% say you're just here for the show. Well, I'm glad you're here for Tesla because that is exactly what we're doing it for. Elon Musk said, Dave, will you please do me a favor? Will you please go ahead and stream my results? We need to get it out to the public. And I said, you know what, Elon, I'll do it for you, but I need a Model Y. I need a Model Y in my barn tonight so I can do it in front of. And he couldn't do it, but we're still going to do him a favor. We're going to go ahead and stream these results just for him. So I hope you guys are ready. I'm pumped. I don't know if you can hear my voice. I'm pumped. I'm excited. I'm ready to rock, baby. And this monster's got me going. That's good. I can't wait to pop open a Reese cup that I got for $1. A king size Reese cup for $1. Yes, I know you're jealous. Make sure you guys hit that like, hit that subscribe button. We are doing it big here. And, you know, I got probably, I would say, another 50 to 60 hours left. And this YouTube will be fully monetized. And I'll actually be making money off of the viewership and my ad revenue. So I am pumped. I'm pumped. A lot of you guys have been here with me for quite some time. I know B. Stewie has been here from day one. So thank you so much for that. Nothing but love from you guys. And we're going to go ahead and make sure that everybody has got this. Let's see here. Give me a minute. We just got a few minutes. We got 5 minutes, guys. Let's go, let's go, let's go. Let's go, Mickey Ficky. Oh, yeah. All right, guys. 4 minutes. 4 minutes to go. Four minutes to go, baby. Let's do it. I'm excited. All right, here we go. Four minutes. 20 more hours to go. Whoa, I want to be sedated. Make sure we got the whole thing in here. There we go. Oh, it's audio only. Okay, well, that makes sense. No big deal. B. Stewie, what's that? Sunscreen? I'll show you what B. Stewie just put this in the chat because my head. Oh, crap, dude. Yeah, for sure. I mean, the sun is just, oh, I thought it was down behind the the trees, it must have went behind one tree and not the other. And now I'm blinded for looking. Genius. But yeah, B. Stewie put this in here because my head looks like it's on fire. It won't be there for very long. That's hilarious, dude. But I did. I looked at the sun and now I can't see shit. But yes, here we go. I hope you guys are ready. I am pumped. I am pumped, 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 baby. Let's go. It won't be long now. Let's see what else. Tesla is just below that $400 area right now. So pay attention, folks. Pay attention. And no E, thank you so much for putting my my thing out there for everyone to look and see. I do have a feeling that everybody took such a bad hit the other day oops, sorry about that. Sorry about that, guys. Not supposed to hear that. Everybody took such a bad hit the other day when Tesla had that pullback and DeepSeek came out. Everybody took a bad hit. I always notice there is a lot less people active in the market and in the chats and watching YouTubes on stock market related videos when there's a big hit in the overall market. I know when I used to take these big hits when I was new, I would still go at it. I would still be super focused and learning from my mistakes and getting better. There is an obsession phase in the market. And you know, Dan, one of the gentlemen that I interviewed, Dan the man, he actually talked about this. All right, here we go, guys. We want to wait. They're gonna ding me for the sound on this. Oh, that's cool. You guys can't hear it just yet. But you know, what was I saying? Oh, Dan, the gentleman that I interviewed talked about this before. He said, you know, there's always an obsession phase. There's always an obsession phase with a stock trader, right? And you have to have that obsession phase. If you don't have the obsession phase, then are you really going to make it? You need to be obsessed. You need to learn everything that you can. And then over time, it does. You start to relax. You don't have to worry so much about being obsessed. You know, you just have to stay focused and have an understanding of what's going on in the overall market and stay focused and then stay disciplined, right? So if you are obsessed, that's a beautiful thing. Stay obsessed, but stay disciplined. Make sure that you are not over trading. You know, and with these huge dips like this, you can tell the people that are obsessed and the people that are just here to try and get rich quick. Those people that are trying to get rich quick, they never last. They never last. It's never, you know, a sustaining thing. Never a sustaining thing. Oh, that sounds like a door was opening. It's actually my child crying. That's A-okay. Oh, Elon Musk will be out here soon to say hello to us, and you won't have to hear baby crying door openings. Currently trading at 397.08. Things are looking A-okay for Tesla because we had a big sell-off at the opening, and we had the whole eat my shorts coming out and saying, you know, look at me, everybody, looking at me, everybody. And then, of course, he didn't come back and didn't say, hey, look, man, I was wrong. He said, I covered, man. I did so good. Look at me, pat me on the back. Good for you, man. I'm so proud of you. But anyway, it looks like only one person voted for eat my shorts. But we are sitting at 396.81. And that's why I always say, you never, ever act like you truly know. You really don't. You never truly know what's going on in the overall market. So, ladies and gentlemen, without further ado, come on out here, Elon Musk. You know, what if he popped up like right next to me? He's like, what's up, guys? What's up? That'd be fun. Let's do it. Let's do it, Elon. Get your butt out here. I got people waiting, you know? Come on now. Come on. Trading at 397.28, just below that $400 area. I wouldn't mind seeing this rip tater chipping, especially because I'm holding a whole one share. Just to keep you entertained, we're up $6.11. That won't even buy you a pack of cigarettes nowadays. I drove past the store. I seen for a pack of cigarettes, it's like $10 a pack now here in Michigan. Absolutely nutso. If you are here for Tesla, don't you worry. Don't you worry. It's coming up. It should be starting right meow, but it has not. We have the audio. Everything is right here. Make sure you stay tuned. We're just waiting on the audio to start, and Elon Musk will be out very soon. B Stewie says you need a crystal ball for this market, and I do. I have this beautiful crystal ball. What's the crystal ball say? It says, it pays to be positive. You got to be careful. I might catch a fire, start a fire with this thing, with the with the sun beaming on my head. Look at, I really will start fire if I'm not careful. It's good to have you guys. Thank you guys so much for being here. We got 15 likes. If you haven't already, hit that like button. And of course, vote on the poll. Vote on the poll. Will we end this earnings call above 400 for Tesla, or will we be below? It's a very easy question to answer. 82% of you say yes, we will end up above that $400 area. It's a key area for Tesla. If we zoom out, which let's hope the charts behave, but if we zoom out here, you guys can see that $400 area is a very key level. Why? Because it is acted as support and resistance before. The majority of that area is right here acting as support. 1, 2, 3, 4, 5, 6, 7 different times. Now that we're below it, we need to get above that 400 or it's going to catch. I almost read your I almost read your comment while I'm talking. Catch fire. No, if we can catch a bid and we can get above this $400 to $410 area, it will be acting as support again. But right now we're just below it at $397.25, waiting on that Q4 full year 2024 Tesla financial results webcast question and answer to start. And it will be starting very, very soon, guys. So bear with me here. I'm pumped. I am pumped. Pretty good music, though. Yeah, baby. Yeah, we don't want the TV to catch fire. We got the rockets up. We got the rip tater chip going on. Things are looking good. All right, let's zoom back on the 1 minute. We're going to get this set up. We'll see if this thing gets any crazier. Yep, always. Wonk, 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 wonk. I don't know why it does it. I really have no idea why it does it. It's crazy. Here we go. Oh my goodness. Here we go. Maybe. There we go. Okay. Don't touch the charts. Don't touch them. Sun's finally gone down. There, I'm safe. I'm safe now. All right, here we go, guys.
Webcast. My name is Travis Axelrod, the head of investor relations here at Tesla, and I am joined today by Elon Musk and Vaibhav Taneja and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations.
I'll be right back.
Today.
I'm going to use the restroom.
Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So in summary, in Q4, we set a record and delivered vehicles at an annualized rate of nearly 2 million a year. So congratulations to the Tesla team on excellent work achieving record production and deliveries. Model Y was the best-selling vehicle of any kind for 2024. That's worth noting. Not just the best electric vehicle, the best vehicle of any kind on Earth, number one, was Model Y. We're staying focused on maximizing volumes and obviously doubling down, or I don't know what. Really, I was going to say doubling down on autonomy, but really it's like autonomy is like 10xing things, frankly. Doubling is not even enough. We made many critical investments in 2024 in manufacturing AI and robotics that will bear immense fruit in the future. Immense. Like it's, in fact, to such a scale that it is difficult to comprehend. And I've said this before, and I'll stand by it. I see a path. I'm not saying it's an easy path, but I see a path to Tesla being the most valuable company in the world by far. Not even close. Like maybe several times more than. I mean, there is a path where Tesla is worth more than the next top 5 companies combined. There's a path to that. I mean, I think it's like an incredibly, it's like a difficult path, but it is an achievable path. And that is overwhelmingly due to autonomous vehicles and autonomous humanoid robots. So our focus is actually building towards that. And that's what we're laying the ground. We laid the groundwork for that in 2024. We'll continue to lay the groundwork for that in 2025. In fact, more than lay the groundwork, actually, so be building the structure. We're building the manufacturing lines, I'd like setting up for what I think will be an epic 2026 and a ridiculous 27 and 28. Ridiculously good. That is my prediction. As yet, very few people understand the value of full self-driving and our ability to monetize the fleet. Some of these things I've said for quite a long time, and I know people have said, well, Elon's the boy who cried wolf like several times, but I'm telling you, there's a damn wolf this time, and you can drive it. In fact, it can drive you. It's a self-driving wolf. For a lot of people, their experience of Tesla autonomy is like, if it's even a year old, if it's even 2 years old, it's like meeting someone when they're like a toddler and thinking that they're going to be a toddler forever. But obviously they're not going to be a toddler forever. They grow up. but if their last experience was like, oh, FSD was a toddler, it's like, well, it's grown up now. Have you seen it? It's like walks and talks. That's really what we've got. And it's difficult for people to understand this because human intuition is linear, as opposed to what we're seeing is exponential progress. So that's why my number one recommendation for anyone who doubts is simply try it. Have you tried it? When's the last time you tried it? And the only people who are skeptical are those who have not tried it. Passenger car typically has only about 10 hours of utility per week out of 168. A very small percentage. Once that car is autonomous, my rough estimate is that it is in use for at least a third of the hours of the week. These things that already exist with no incremental cost change, just a software update, now have 5 times or more the utility than they currently have. I think this will be the largest asset value increase in human history. Maybe there's something bigger, but I just don't know what it is. And so people who look in the rearview mirror are looking for past precedent. But of course, it will over time work just as well everywhere else.
I don't know what the hell's going on. That's on their end, though, not mine.
So we're working hard to grow our annual volumes. Our constraint this year, our current constraint is battery packs this year, but we're working on addressing that constraint. And I think we will make progress on addressing that constraint. And then really ballistic in 27 and 28.
That audio is on his end, not mine, guys. Sorry.
Yeah. So a bit more on full self-driving. Our Q4 vehicle safety report shows continued year-over-year improvement in safety for vehicles. So the safety numbers, if somebody has supervised full self-driving turned on or not, the safety differences are gigantic. And people have seen the immense improvement with version 13 and with incremental versions in version 13. And then version 14 is going to be yet another step beyond that is very significant. We launched the Cortex training cluster at Gigafactory Austin, which was a significant contributor to FSD advancement. And we continue to invest in training infrastructure at our Texas headquarters. The training needs for Optimus humanoid robot are probably at least ultimately 10x what's needed for the car, at least to get to the full range of useful roles. You can say, like, how many different roles are there for a humanoid robot versus a car? A humanoid robot has probably 1,000 times more uses and more complex things than in a car. That doesn't mean the training scales by 1,000, but it's probably 10x. Now you can do this progressively, so it doesn't mean like Tesla's going to spend like $500 billion in training compute, because we will obviously train Optimus to do enough tasks to match Optimus robots. But obviously the cost of training is dropping dramatically with time. So, but it is like it's one of those things where I think long-term Optimus will be. Optimus has the potential to be north of $10 trillion in revenue. Like it's really bananas. So then you can obviously afford a lot of training compute in that situation. In fact, even $500 billion of training compute in that situation would be quite a good deal. Yeah. The future is going to be incredibly different from the past, that's for sure. We live at this unbelievable inflection point in human history. So, yeah. So, the proof is in the pudding. So we're going to be launching unsupervised full self-driving as a paid service in Austin in June.
Back at $400.
So, I've talked with the team. We feel confident in being able to do an initial launch of unsupervised car full self-driving in Austin in June. We already have Teslas operating autonomously unsupervised full self-driving at our factory in Fremont, and we'll soon be doing that at our factory in Texas. So thousands of cars every day are driving with no one in them at our Fremont factory in California. They will soon be doing that in Austin and then elsewhere in the world.
Market likes that. Factories. Back up to 402.11.
Which is pretty cool. And the cars aren't just driving to exactly the same spot, because obviously the cars are actually programmed with what lane they need to park into to be picked up for delivery. So they drive from the factory end of line to their destination parking spot to be picked up for delivery to customers. And they're doing this reliably every day, thousands of times a day. It's pretty cool. Like I said, the Teslas will be in the wild with no one in them in June in Austin. So what I'm saying is, this is not some far off mythical situation. It's literally, 5, 6 months away, 5 months away, type of thing. And while we're putting our toe in the water gently at first, just to make sure everything's cool, our solution, our solution is a generalized AI solution. It does not require high precision maps of a locality. So we just want to be cool. It doesn't work beyond Austin. In fact, it does. We just want to put a toe in the water, make sure everything is okay, then put a few more toes in the water, then put a foot in the water, with safety of the general public and those in the car.
Between the
With
audio
regard to
cutting
Optimus,
out and his pauses in between
obviously
talking,
I'm making these revenue predictions
Pissing me
that
off.
sound absolutely insane. I realize that, but they will prove to be accurate. Now with Optimus, there's a lot of uncertainty on the exact timing, because it's not like a station for Optimus. We are designing the train and the station and in real time while also building the tracks. and so they're like, why didn't the train arrive exactly at 12:05? I'm like, we're literally designing the train and the tracks in the station in real time so you're like, how can we predict this thing with absolute precision? It's impossible. The normal internal plan calls for roughly 10,000 Optimus robots to be built this year. Will we succeed in building 10,000 exactly by the end of December this year? Probably not. But will we succeed in making several thousand? Yes, I think we will. Will those several thousand Optimus robots be doing useful things by the end of the year? Yes, I'm confident they will do useful things. The Optimus in use at the Tesla factories, production design 1, will inform what we change for production design 2, which we expect to launch next year. And our goal is to ramp Optimus production faster than maybe anything's ever been ramped. Meaning, like, aspirationally, an order of magnitude ramp per year. Now, if we aspire to an order of magnitude ramp per year, perhaps we only end up with a half order of magnitude per year. But that's the kind of growth that we're talking about. It doesn't take very many years before, we're making 100 million of these things a year. If you go up by, let's say, a factor, by 5x per year. It's insane. Insane. Not 50%, 500%. So, these are big growth numbers. But we do need to, this is an entirely new supply chain. It is entirely new technology. There's nothing off the shelf to use. We tried desperately with Optimus to use any existing motors, any actuators, sensors. Nothing worked for a humanoid robot at any price. We had to design everything from physics first principles to work for a humanoid robot, and with the most sophisticated hand that has ever been made before, by far. Thread, a needle.
Okay, we're sitting at 409.
I mean, this is the level of precision.
409.32. I'm sorry about the audio, guys. It's cutting in and out. There's nothing that I can do.
And so
B. Stewie thinks Elon is high as a kite. He probably could be.
So
I don't know what's going on with the audio, guys. It's not on my end. It's on their end. So bear with me.
So
I'm trying to hear everything that he's saying, but
be overwhelmingly
I like that he's talking about the Optimus robots.
Regarding energy, back to Earth. Earth to Elon. Storage is a big deal, and will become it's already super important, will become incredibly important in the future. And it is something that enables far greater energy output to the grid than is currently possible. Because the grids are the vast majority of the grid has no energy storage capability. So they have to design the power plants for very high peaks, and assuming that there's no energy storage. Once you have grid energy storage and home-based energy storage, the actual total energy output per year of the grid is dramatically greater than people think. Maybe it's at least double. This will drive the demand of stationary battery packs, and especially the grid scale ones, to insane, basically as much demand as we could possibly make. We have our second factory, which is in Shanghai, that's starting operation, and we're building a third factory. So we're trying to ramp output of stationary battery storage as quickly as possible. Now, there is a challenge here where we have to be careful that we're not robbing from one pocket to take to another pocket, because for a given gigawatt hours per year of cell output, we have to say, does it go into stationary applications or mobile applications? We can't go into both. So we have to make that trade-off. But overall, the demand for total gigawatt hours of batteries, whether mobile or stationary, that will grow in a very, very big way over time. So in conclusion, 2025 really is a pivotal year for Tesla. And when people look back on 2025 and the launch of unsupervised full self-driving, true real-world AI that actually works, I think they may regard it as the biggest year in Tesla history, maybe even bigger than our first car, the Roadster, or the Model S, or the Model 3, or Model Y. In fact, I think it probably will be viewed 25 as maybe the most important year in Tesla's history. There is no company in the world that is as good at real-world AI as Tesla.
The biggest year for Tesla is 2025 because of the robots.
You say, who's in second place for real-world AI? I would need a very big telescope to see them. That's how far behind they are. All right.
Great. Thank you very much, Elon. And Vaibhav has some opening remarks as well.
Yeah, I'll talk about things on Earth. As Elon mentioned, in Q4, we set records at vehicle deliveries and energy storage deployments in an uncertain macro environment. We were able to grow auto and energy storage volumes on a year-on-year basis. For this, I would like to thank the efforts of everyone at Tesla to make this a reality, and our customers who helped us achieve this feat. Coming into the fourth quarter, our focus was to reduce inventory levels in the automotive business. And we accomplished that by ending the quarter with the lowest finished good inventory in the last 2 years. This was a result of offering not only attractive financing options, but also other discounts and programs, which impacted ASPs. While we saw volume growth in almost all regions that we operate in, we hit a new record for deliveries in the Greater China market. This is an encouraging trend since we grew volume in a highly competitive BEV market. On the automotive margin front, we saw a quarter-over-quarter decline, primarily due to lower ASPs and due to the recognition of FSD-related revenue in Q3 from feature releases. Our journey on cost reduction continues, and we were able to get our overall cost per car down below $35,000, driven primarily by material costs. This was despite increased depreciation and other costs as we prepare for the transition to the new Model Y, for which we recently started taking orders in all markets. All our factories will start producing the new Model Y next month. While we feel confident in our team's abilities to ramp production quickly, note that it is an unprecedented change, and we're not aware of anybody else taking the best-selling car on the planet and updating all factories at the same time. This changeover will result in several weeks of lost production in the quarter. As a result, margins will be impacted due to idle capacity and other ramp-related costs, as is common in any launch, but will be overcome as production is ramped. We will be introducing several new products throughout 2025. We are still on track to launch a more affordable model in the first half of 2025, and we'll continue to expand our lineup from there. On a dollar-for-dollar basis, we believe we have the most compelling lineup today compared to the industry, and it will continue to get better from here. As always, all our products come with the best software in the industry, autonomy features, and capable of full autonomy in the future. And despite the premium experience, the total cost of ownership is close to mass market, less premium competitors. Energy storage deployments reached an all-time high in Q4 and resulted in, but declined sequentially. This was a result of higher, growth came from Megapack and Powerwall. Both businesses continue to be supply constrained, and like Elon mentioned, we're trying to ramp up production with Mega Factory Shanghai coming online this quarter onwards. While quarterly deployments will likely continue to fluctuate sequentially, we expect at least 50% growth in deployments year over year in 2025. Gross profit and margins in the service and other business was up year over year, but declined sequentially. This was the result of higher service center costs and lower profit from used car business. The businesses within service and other primarily support our new car business, especially through their impact on total cost of ownership. Therefore, while we manage them to be positive on a GAAP basis, we do not expect similar margins as the rest of the business. There's a lot of uncertainty around tariffs. Over the years, we've tried to localize our supply chain in every market, but we are still very reliant on parts from across the world for all our businesses. Therefore, the imposition of tariffs, which is very likely, and any reciprocity will have an impact on our business and profitability. Our operating expenses grew both year over year and sequentially. The biggest driver of the increase was R&D as we continue to invest in AI-related initiatives. The remaining increase came from growth in our sales capabilities and marketing efforts from referral program. For 2025, we expect operating expenses to increase to support our growth initiatives. It is important to point out that the net income in Q4 was impacted by a $600 million mark-to-market benefit from Bitcoin due to the adoption of a new accounting standard for digital assets, whereby we'll take mark-to-market adjustments through other income every reporting period going forward. Our free cash flow for the quarter was $2 billion, and despite CapEx increase of over $2.4 billion in 2024, we were able to generate free cash flow of $3.6 billion for the year. CapEx efficiency is something we are extremely focused on. While we have invested in AI-related initiatives, we have done so in a very targeted manner to utilize this spend to get immediate benefits. The build-out of Cortex was accelerated because of the actually helped accelerate the rollout of FSD version 13. Cumulative AI-related CapEx, including infrastructure, so far has been approximately $5 billion. And for 2025, we expect our CapEx to be flat on a year-over-year basis. In conclusion, like Elon said, 2025 is going to be a pivotal year for Tesla. There are a lot of investments which we have made and will continue to make in this coming year, which will set the pace for the next phase of growth. And it is something which now I'm getting out of Earth. It is going to be out of this world. And we just are putting the right foundation. And that's all.
I'm telling you, with this audio cutting out, it's really making me mad, man. It's on their end, though. It's not on mine. I don't know why. Bear with it. Come on, Elon. Or somebody's getting fired today. Somebody's getting fired. Whoever's on the audio is getting fired today on Elon Musk Studios. You know he loves to fire people. He absolutely will be firing somebody. Yep. Yeah, I think their audio completely cut out. So now I'll just step in for Elon Musk since their audio just completely cut out. What a crap earnings audio call. I mean, come on, guys. You're supposed to be the leader in technology.
Significantly above
there. Now he's
the
back.
average human driver. So it's not anywhere like much safer, not like a little bit safer than human, way safer than human. So the standard has to be very high, because the moment there's any kind of, accident with an autonomous car, this immediately gets worldwide headlines, even though about 40,000 people die every year in car accidents in the US. And most of them don't even get a mention anywhere. But if somebody scrapes a shin with an autonomous car, it's headline news.
We want to avoid that.
Yeah. So it's really the only thing holding us back is an excess of caution. But people can suddenly get a feel for how well the car would perform as unsupervised FSD by simply allowing the car to drive you around your city and see how many times did you have to intervene, not where you wanted to intervene or were a little concerned, but how many times did you have to intervene for definite safety reasons. And you will find that is currently very rare, and over time, almost never.
Great. Thank you very much. The next question is, are there any discussions with other auto companies about licensing FSG?
Yes. What we're seeing is, at this point, significant interest from a number of major car companies about licensing Tesla full self-driving technology. What we've generally said is the best way to know what to do is take one of our cars apart, and then you can see where the placement of the cameras are, what the thermal needs are of the Tesla AI inference computer. That's better than us, sending some CAD drawings. And then we're only going to entertain situations where the volume would be very high. Otherwise, it is not worth the complexity. And we will not burden our engineering team with laborious discussions with other engineering teams until we obviously have unsupervised full self-driving working throughout the United States. I think the interest level from other manufacturers to license FSD will be extremely high once it is obvious that unless you have FSD, you're dead.
Great. Thank you very much. The next question is Optimus now mostly design locked for 2025 production?
Optimus is not design locked. So when I say we're designing the train as it's going down, we're redesigning the train as it's going down the tracks while redesigning the tracks and the train stations.
Yeah, we've already answered.
Mm-hmm. Yeah, it's rapidly evolving. It's rapidly evolving in a good direction. It's pretty damn amazing, actually. The team's doing a fantastic job. We really have by far the best team of humanoid robotics engineers in the world. And we also have all the other ingredients necessary, because you need a great battery pack, you need great power electronics, you need great charging capability, you need great communications, good to have Wi-Fi and cellular connectivity. And of course, you need real-world AI, and then the ability to scale that production to huge levels. So you have to design for manufacturing. The things what other companies are missing is they're missing the real-world AI, and they're missing the ability to scale manufacturing to millions of units a year.
I think that is an underappreciated thing, that industrialization of design is a whole different thing than making a design.
Yeah, prototypes are trivial, basically. Prototypes are easy, production is hard. I've said that for many years. The problem is that there's those who have never been involved in production or manufacturing somehow think that once you come up with some eureka design that you magically can make 1 million units a year. And this is totally false. There needs to be some Hollywood story where they show actually the problem is manufacturing. I've never even heard of one. It just doesn't fit the narrative. the Hollywood thing is like, it's like some lone inventor in a garage goes eureka, and suddenly it files a patent, and suddenly there's millions of units. Listen, guys, we're missing really 99% of the story. 1% is, that old saying of 1%, like a product is 1% inspiration, 99% perspiration. The Hollywood shows you the 1% inspiration but forgets about the 99% perspiration of actually figuring out how to make that initial prototype manufacturable and then manufactured at high volume such that the product is reliable, low cost, consistent, doesn't break down all the time. And that is 100 times harder, at least, than the prototype.
Then you have to get it there, deliver it back.
Yeah, you're going to meet all these regulations, and there's a zillion regulators around the world. It's very difficult.
Great, thank you. The next question is
Sounds like the audio is a little bit better. We're
trading
trading at 408.50, so well above that $400 area. Let's see if we can hold.
Well, it may for this year we expect to just close the loop with Optimus being used internally at Tesla, because we obviously can easily use several thousand humanoid robots at Tesla for like the most boring, annoying tasks in the factory, like the tasks nobody wants to do, where we have to like beg people to do this task, and then it's like the robot's totally happy to do the boring, dangerous, repetitive task that no humans want to do. And that's also actually some of the easiest use cases for us to, have Optimus do things like, like load the hopper, like for, like say in body line, if you're like transporting, pieces of sheet metal to the robot, which is already a robot, the robot welding line for the body, and you just have to nonstop take things out of a from one fixture to another fixture. And it's a very boring job. That's the kind of thing what Optimus could do.
The guy who runs around and dumps all the weld studs in the bins.
Yeah, there's a ton of boring jobs, tedious jobs, dangerous, slightly dangerous jobs that's perfect for Optimus. So we expect to use Optimus for those tasks at our factories, and that'll help us close the loop for improvement this year. It's really with production version 2, which I think launches sometime next year. I'd like it to be the beginning of next year, but maybe it's more like the middle of next year. And then we have to just with a production line that is designed for.
Stop cutting out, Elon. Come on now. This isn't on my end, guys. Just bear with me. This is on their end. It keeps cutting in and out, and it really shouldn't be. The leaders of technology, they're talking about Optimus robots, but they can't get a clear audio. I don't know if it's truly them or if it's YouTube or what. But bear with it, guys. It sucks. Just keeps cutting in and out. Kind of makes for a shitty stream, and I look like a bad host. But there's nothing I can do about this. I really hope. There we go.
And I think probably with version 2, as a very rough guess, because there's so much uncertainty here, very rough guess that we start delivering Optimus robots to companies that are outside of Tesla in maybe the second half of next year, something like that. But like, so this is such an exponential ramp that it'll go from no one's receiving humanoid robots to these things like coming out like crazy.
So we can't build enough.
Well, we're always going to be in the we can't build enough situation. Demand will not be a problem, even at a high price. And then, as I said, like once we're at a steady state of above 1 million units a year, I think the production, I'm confident at 1 million units a year that the production cost of Optimus will be less than $20,000. If you compare the complexity of Optimus to the complexity of a car, so just the total mass and complexity of Optimus is much less than a car. So I would expect that at similar volumes to, say, the Model Y, which is over 1 million units a year, that you'd see Optimus be, I don't know, half the cost, or something like that. what the price of Optimus is a different matter. The price of Optimus will be set by the market demand.
Great. Thank you very much. The next question is, what is the status on mass production of the Tesla Semi, and how will it impact revenue at scale?
I can take that one. So we just closed up the semi-factory roof and walls last week in Reno. It's ahead of schedule, which is great with the weather. In Reno, you never know what's going to happen, but we're prepping for mechanical installation of all the equipment in the coming months. The first builds of the high volume semi design will come late this year in 2025 and begin ramping early in 2026. But as we've said before, the semi is a TCO no brainer. Like it's really similar to Optimus. It's going to be, set by how much people pay, and then it as a total cost of ownership, it's much cheaper than any other transportation you can have. So at that point, when we're at scale, it will meaningfully contribute to Tesla's revenue. Well, I think it's difficult to say how much. Anything you want to add, Elon?
No, I mean, I do think Tesla Semi, again, with autonomy, is going to be incredibly valuable. That we actually have a shortage of truck drivers in America. That's one of the limiting factors on transport. People are human, so they get tired, and sometimes, there's. I have a lot of respect for truck drivers because it's a tough job. But because it's a tough job, there's not that many people that want to do it. And there's actually fewer, I believe, if my understanding is correct, there are fewer people entering truck driving as a profession than are leaving it.
Yes.
So when you think, yeah, exactly. So when you consider, okay, there's more people leaving truck driving as a profession than entering it, well, we're going to have a real logistics problem as time goes by. So autonomy will be very important to meet that need. So it'll.
I see you guys. Thank you for hitting that like.
Thank
you for hitting that subscribe button. I appreciate it.
It's a several billion a year opportunity, which I don't know in this context, is that these days, does several billion a year matter? I think it does. Not nothing. It's probably, it's probably like a 10 billion a year thing. Yeah, it's $1 billion a month at some point, probably. But it's all this is going to pale in comparison to Optimus. So, yeah, $1 billion a month it's a lot, but it's not. It's going to be like 1% of Optimus or something,
Great. Thank you very much. We already covered the next question in opening remarks. So moving on, is it expected that Tesla will need to upgrade Hardware 3 vehicles? And if so, what is the timeline and expected impact to Tesla's CapEx? I'm going to refer to cost there.
They're really asking the tough questions, aren't they?
I guess we haven't stopped working on Hardware 3 yet. We are still making software releases. We released the 12.6 release recently, which was it's like a baby V13, but it's a significant improvement compared to what they had previously. And people are still finding ways to distill larger models into smaller models. So we're not giving up on Hardware 3. We're still working on it. Just the releases will trail the Hardware 4 releases.
Great. Thanks, Ashok.
Yeah. I mean, I think the honest answer is that we're going to have to upgrade people's Hardware 3 computer for those that have bought full self-driving. And that is the honest answer. And that's going to be painful and difficult, but we'll get it done. Now I'm kind of glad that not that many people bought the FSD package.
Great. Thanks, Elon. The next question. Has Tesla given up on ramping their solar roof product?
No, we're sorry, Mike. Oh, Mike, go ahead. Yeah.
Oh, yeah, I can take it. Yeah, solar roof remains a core part of the residential product portfolio, and it still remains where it draws a lot of customer interest despite it being premium products. We've worked on multiple iterations of engineering to make the product easier to install and distribute by reducing the SKU count. And more recently, rather than direct installation, we are focused on growth through our nationwide network of certified installers. And many of those, they've been installing solar roof with us for many years.
Yeah, that's actually turned out to be a much better way for is just let the roof, just supply product to the roofing industry. And especially when somebody's is getting a new roof anyway, or building a house from scratch. Obviously, this is by far the most efficient time to put in a solar roof, as opposed to putting a solar roof on a house where the roof still has 20 years of life. That's not economically sensible. But if it's a new house or the roof needs to be replaced anyway, then solar roof can make a lot of sense. And it is a premium product. It's like it's kind of like Model S, Model X or something. It's like it's a premium product. I think it looks really cool. And your house generates electricity, and if you combine it with the Tesla Powerwall battery, then you can be self-sufficient. So even if the grid turns off, for several days, your house still works. And your roof looks awesome. So it's like, I recommend anyone who can afford it, get the Tesla solar roof and the Powerwall. Your family's life might depend on it.
Get enough.
And just in terms of convenience, your kids are not going to yell at you because their computers don't work because the power went out and you can't charge your phone.
True story.
Actually happens. Yeah. You literally can't even call anyone because your phone's out of juice.
Thank you very much. The next question was covered in opening remarks, so we will skip that. And the last question from say.com, what technical breakthroughs will define V14 of FSD, given that V13 already covered photon to control?
Well, we've gone a hell of a lot further than photons to output. We've been in sort of the nothing but nets situation, nothing but neural nets from photons to controls for a while now. We're just improving the neural nets. I guess we could get into some of the technical details to some degree. I have to say, I continue to be amazed by just how effective autoregressive transformers are at solving a wide range of problems. I mean, Ashok, is there anything you'd like to add there without giving away the sort of family secrets?
I mean, except for things we put on X already. So continuing to scale the model size a lot. We scale a bunch in V13, but then there's still room to grow. So we're going to continue to scale the model size. We're going to increase the context length even more. The memory is sort of like limited right now. We want to increase the amount of memory it holds, like to even minutes of context for driving. We're going to add audio to handle emergency vehicles better. Add like data of the tricky corner cases that we get from the entire fleet, any interventions or any kind of user intervention. We just add that to the data set. So the scaling in basically every axis, like training compute, data set size, model context, and also all the reinforcement learning objectives.
Great. Alrighty. With that, we will move over to analyst questions. So just as a reminder, you will need to unmute yourself to ask your question. The first question will be coming from Daniel Roska from Bernstein. Daniel, please go ahead and unmute yourself.
Hey, good evening, everybody. It's Daniel from Bernstein. Elon, Tesla's share price clearly already includes quite a few of the anticipated benefits you talked about today, yet realizing what you call kind of difficult but achievable will take some time. What are you pushing the Tesla executive team to do differently now to accelerate the innovation in order to realize the value you described for the company?
Well, I mean, we're working on perfecting real-world AI and making rapid progress week over week, if not month, certainly month over month, but often week over week. I spent a lot of time with the Tesla AI team and the Tesla Optimus team. I mean, I go where the problem is, essentially. Like, not, if something's, this is, unfortunate. Sometimes I don't talk to a Tesla executive and like, hey, we don't see you very often. I'm like, that's because your stuff is working awesome. Your stuff is working really great. Unfortunately, I don't see them very often because I go where the problem is. So, not where the problem is, what's the greatest challenge that lies ahead? So, obviously, there are many challenges with Optimus. It's a hard problem to solve. many challenges with vehicle autonomy, but we're making rapid progress in both. Yeah.
Okay. I mean, sounds like you've got a conviction that the pieces you need, right, are in place.
Yeah.
If we kind of go 12 months down the line and we look back, and you had some of those, but maybe what are the kind of 2 or 3 KPIs that would tell you that, you know, you're on track and it's going the right way, and the pieces you've put in place are the right pieces, right? That's kind of what I'm looking for. Or other way around, where would it be off most likely in your mind that you say, hey, I need to go back there and I need to change something to enable the team better?
Well, I mean, I think the predictions that I'm making here are going to be pretty accurate. You know, and it's worth noting, like, so sometimes people say, oh, Elon's always late. Well, actually, no, the problem is that the media reports on when I'm late, but never reports on when I'm early. So sure, I'm optimistic, but I'm not that optimistic. You know, there are many cases in the past where we've been early, you know, such as completion of the Shanghai factory, or in fact, factory completion has generally been ahead of schedule, not behind. Yeah, but I like I said, I'm very confident we'll have released unsupervised full self-driving, fully autonomous Teslas in Austin and several other cities in America by the end of this year. That's probably everywhere in America next year, and everywhere in North America at least. I think in terms of next year, our constraint, I think, is likely to be just regulatory. You know, like Europe really has, for example, Europe is a layer cake of regulations and bureaucracy, which that really needs to be addressed. You know, there's this you know, joke like America innovates, Europe regulates. It's like, guys, there's too many refs on the field. I mean, for example, for us just to release supervised full self-driving in Europe, even though it works really well, we have to go through a mountain of paperwork with the Netherlands, which is our primary regulatory authority. Then the Netherlands presents this to the EU in, I think, May. And there's like this big EU country committee. We expect it to be approved at that time, but there's nothing we can do to make that May happen sooner. In fact, nobody seems to do. I guess all the countries would have to somehow vote in some way to have it happen sooner than May.
Hey, I see you guys hitting
Otherwise,
that
it won't
like and
happen
subscribe.
sooner
Thank
than
you
May.
so much. I appreciate you supporting the channel.
So then when is unsupervised FSD allowed in Europe? I'm like, May next year, maybe? I don't know. Well, I have to find out when the EU is meeting again. Sometimes it's a 12-month cadence, sometimes a 6-month cadence. Then in China, which is also a huge, gigantic market, we do have some challenges because they won't currently allow us to transfer training video outside of China. And then the US government won't let us do training in China. So we're in a bit of a bind there. So like a bit of a quandary. So what we're solving that is by literally looking at videos of streets in China that are available on the internet to understand, and then feeding that into our video training so that publicly available video of street signs and traffic rules in China can be used for training, and then also putting it in we've got a very accurate simulator, and so it will train using sim for bus lanes in China. Like bus lanes in China, by the way, one of our the biggest challenges in making FSD work in China is the bus lanes are very complicated. And there's like literally like hours of the day that you're allowed to be there and not be there. And then if you accidentally go in that bus lane at the wrong time, you get an automatic ticket instantly. So it's kind of a big deal, bus lanes in China. So we have to put that into our simulator, train on that. The car has to know what time of day it is, read the sign. Anyway, we'll get this solved. But I think we'll have unsupervised FSD in almost every market this year, limited simply by regulatory issues, not technical capability. And then unsupervised FSD in the U.S. this year, in many cities, but nationwide next year. And hopefully we have unsupervised FSD in most countries by the end of next year. That's my prediction with the best data that I have right now.
Great. Thank you very much. The next question will come from Adam Jonas at Morgan Stanley. Adam, please feel free to unmute yourself.
Thanks, everybody. So, Elon, you've said in the past about LiDAR, that for AVs at least, that LiDAR is a crutch, a fool's errand. I think you even told me once, even if it was free, you'd say you wouldn't use it. You still feel that way?
Yes.
Care to elaborate? Or just,
simple.
I have another
Yes.
question.
Look, we even have a radar in the car and we turned it off.
I got it. All right. So you're still, yeah. People think you're crazy, but for not.
Look, I mean, obviously humans drive without shooting lasers out of their eyes. I mean, unless you're Superman, but like humans drive just with passive visual. Humans drive with eyes and a neural net and a brain neural net. So sort of biological, so the digital equivalent of eyes and a brain are cameras and digital neural nets or AI. So that's the entire road system was designed for passive optical neural nets. That's how the whole road system was not designed, and what everyone is expecting that's how we expect other cars to behave. So therefore, that is very obviously the solution for full self-driving as a generalized solution for full self-driving, as opposed to the very specific, neighborhood by neighborhood solution, which is very difficult to maintain, which is what our competitors are doing.
Elon, quote, people drive without laser beams shooting out of their eyes.
LiDAR doesn't work in the fog, guys.
LiDAR has a lot of issues. Like I don't have some like the SpaceX Dragon docks with the space station using LiDAR, that a program that I personally spearheaded. I don't have some fundamental bizarre dislike of LiDAR. It's simply the wrong solution for driving cars on roads.
Right. You understand how LiDAR works. I get it.
Literally designed and built our own LiDAR. I oversaw the project, the engineering of the thing. It was my decision to use LiDAR on Dragon, and I oversaw that engineering project directly. So I'm like, we literally designed and made a LiDAR to dock with the space station. If I thought it was the right solution for cars, I would do that, but it isn't.
Yeah. All right. Just as a follow-up, at CES, you said, I'm paraphrasing, that any AI will be able to do any cognitive task not involving atoms within the next 3 or 4 years. And that would imply, Elon, that before the end of President Trump's term in office, that AI would be moving pretty damn quickly into the physical world, into the world of photons and atoms. And I'm thinking, given your work with the administration, how confident are you that the U.S. will have the manufacturing and the supply base to make good on your excitement about physical AI by the by latter this decade? We seem pretty vulnerable right now. I've seen you tweeting about, Xing, excuse me, Elon, about China. Freudian slip, about China making more drones in a day than the U.S. makes in a year, and all the entanglement of the supply. So what has to happen in the U.S. to make that possible? What's your message, and what can you do about it, and what's relevant for Tesla shareholders? Thanks, Elon.
Well, at Tesla, obviously, we think manufacturing is cool. SpaceX, we think manufacturing is cool. But in general, for talented Americans, they need to beyond my companies, beyond me, and the people and my teams here. In general, we need to make manufacturing cool again in America. And I honestly think people should move from law and finance into manufacturing. That's my honest opinion. We have too much. This is both a compliment and a criticism. We have too much talent in law and finance in America, and there should be more of that talent in manufacturing. I mean, at Tesla, we're making sure that we can continue to manufacture our stuff, even in the event of geopolitical tensions rising to very high levels.
Great. Thank you very much. The next question will come from Pierre Ferragu at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks guys for taking the question. So I have a question, Elon, on deploying like robotaxis in June in Austin. So that's great news. And I was wondering if it means I can, drive down to Austin in June and try unsupervised by myself with my car.
Yeah.
Or it's going to be more like your fleet testing it.
It'll be our fleet testing it. So that's our sort of toe in the water. We'll be scrutinizing it very carefully, make sure it's not something we missed. But it will be, autonomous ride hailing for money in Austin in June. And then as swiftly as possible, other cities in America. And I expect us to be operating, doing unsupervised activity with our internal fleet in several cities by the end of the year. Then it's probably next year when people are able to add or subtract their car from the fleet. So, kind of like Airbnb, where you can sort of add or subtract your house or your guest room. You can say like add it to the Airbnb inventory or don't add it to the Airbnb inventory. If you're traveling for a month, you can, or whatever the case may be, you can let other people use your house, and then you can. Anyway, so that's probably next year because we want to just make sure we've ironed out any kinks. And a lot of it is, it's not like we're not splitting the atom here. It's just a bunch of work that needs to be done to make sure the whole thing works efficiently, that people can order the car. It comes, it's the right spot, does exactly the right thing. All the payment systems work. The billing works.
Okay. But then, so my follow-up question would be, I have a Tesla, I have FSD, and I have to keep my eyes on the road all the time. It's super boring because I don't really need to intervene anymore. Yeah. And but the really annoying thing is that I can't just check my emails. And so, are you working also on introducing, like a kind of like free unsupervised where I could be eyes off and I would be able to check my email and would just need to, with a 5-second notice, have to go back and keep an eye on what's happening? Or is that something you're working on as well? Because it feels so close with V13 that I wonder if it's something we could expect for this year. It's a very selfish question I ask for myself, to be honest.
Yes. We need to be very confident that the probability of injury is low before we allow people to check their email and text messages. In fact, right now we're in this perverse situation, which you may have encountered yourself, where people will actually go to manual driving to check their text messages. Yep. So the computer doesn't yell at them, and then put it back on autonomous mode once they've checked the text messages, which is obviously less safe. Significantly less safe. Significantly less safe. Significantly less safe than just letting people check their text once in a while without the computer yelling at them. Yeah. But we just want to be cautious about that at the advent of that. We're in this sort of, neither here nor there, but just for, I think it's not for many months longer. But yeah, we're in this perverse situation where people will turn the car off autopilot so the computer doesn't yell at them, check their text messages while steering the car with their knee and not looking out the window.
And Pierre, like Elon said, right? If you have any problems with the system, and when people are not looking, that is a dangerous thing. And that's what we're trying to avoid. It's the capability is getting there, but it's not fully there. That's why he was using the term of dipping our toe in the water, then getting comfortable, then keep going.
Anyway, it's not far off. But we want to prove to ourselves, prove to ourselves, and obviously prove to regulators that the car is unequivocally safer in autonomous mode than not. And we're not far off. So this is like low single-digit months.
To the safety aspect, we did publish our vehicle safety report today, and in Q4 was one crash for every 5.9 million miles driven, compared to a crash every 700,000 miles without autopilot.
Right. So we're getting to the point where it's an order of magnitude.
Yeah, it's like 8.5 times safety. Right. So it's just about there.
Yeah,
it's amazing.
Great. Alrighty, and our last question will be coming from Dan Levi at Barclays.
Last
Dan,
question, make it a good one.
Yourself.
Great. Good evening. Thank you for taking the questions. Elon, you've talked about the need for proliferation of sustainable transport in the past as part of sort of broader push to sustainable energy. Look, I know we've heard a lot about President Trump's plans to reverse the EV mandate, and I think there's a view that given regulation is a driver of EV uptake, this could slow EV uptake in the U.S. So what would be your view on the right policy in the U.S., given your comments in the past of the need to push for sustainable transport?
At this point, I think that sustainable transport is inevitable. I'm highly confident that all transport will be autonomous electric, including aircraft, and that it can't be stopped any more than one could have stopped the advent of the external combustion engine, the steam engine, or one could have stopped the advent of the internal combustion engine. Like even if you've been the biggest horse advocate on earth, horses are the way, not these newfangled automobiles. You can't stop the advent of the automobile. It's going to happen. And you can't stop the advent of electric cars. It's going to happen. The only thing holding back electric cars was range, and that is a solved problem.
Great.
And then as a follow-up, in the past, Elon, you had made a comment that you'd be willing to sell cars at effectively no margin to get the cars out there. And there's a comment in the release today of the rate of acceleration of autonomy efforts does impact volume growth. So perhaps you could just talk about, with your efforts on FSD, how we should think about your desire to put more vehicles out in the market to take advantage of your tech advances.
So I'm not sure I understand the question. We have a lot of cars. I mean, we've got millions of cars out there.
So is your question, Dan, that how do we marry our future growth aspects with FSD?
And go ahead and unmute yourself, Dan.
Yeah, more so just how much more aggressively you would be willing to sell your cars versus in light of your improvements on FSD.
Well, right now the constraint we're trying to solve is battery production as opposed to demand. So now Q1 we've got this massive factory retooling for the new Model Y, for example, that obviously has a short-term impact on output. But the problem we're wrestling with, in fact, we're talking that the executive team and I were talking about just before this call was how we've got to figure out how to increase total gigawatt hours of battery production this year, one way or another. That's the constraint on our output.
Great. Alrighty. And with that, I think we are all done for today. So thanks everyone so much.
All right, guys. Well, I tell you what, I think it was robots, robots, robots. That's all Elon Musk had to talk about was robots, the Optimus, and we'll see if those robots do end up coming out in 2025. He said Tesla has a pivotal sequence here coming up in 2025, and it should be the best part of Tesla is 2025. So we will see very, very soon if Tesla does come out. And now, of course, I always say Elon Musk always overpromised, but his first reaction was, but the media never says when we get this done sooner. It doesn't say when our factories come out earlier and sooner and yada, yada, yada. Long story short, we'll see if Elon Musk is right and if 2025 is the best for Tesla as we are closing the day at 406.50. And that is a beautiful thing because, of course, our chat always votes, and 82% of you said yes above 400 at the end of the earnings call. So congratulations once again, chat, because the 17 of you that did vote on this are correctamundo. The 12% said no below 400%. Well, guess what? You're wrong, and you're a loser unless you're learning. Either way, 6% said eat my shorts. Well, that's disgusting. I hope you guys have an absolutely amazing night. We'll see you on tomorrow for the Apple earnings call that will be on at, 2 p.m. That'll be 5 p.m. Eastern. I'll be on here about 3 o'clock to hang out with you guys for a few hours before that comes on. Of course, the earnings comes out at 4. The earnings conference call will come out at 5, and we will be here for you. I hope you guys come, join me, hang out. We love you, and I hope you love me back. Peace, guys. Don't you forget, we will be in our Discord meeting tonight at 9 p.m. to go through a leaders list to find who deserves our attention. We'll see you guys tonight. Peace.